Good morning, everybody. Welcome back to another episode of The Market Open. It is Friday, February 7th. It has been quite a week, and we are done with this week now as we wrap up the final day of the first week of trading in February. It feels like this week has been a little bit of a blur in terms of all of the stuff that has happened. I don't think anyone kind of expected the market's reaction in the way that it did, in particular for a certain stock that a lot of us tend to care about a little bit. I mean, if you're in the Palantir community, obviously this week has been just pretty exceptional. Palantir right here, $110.70 in the pre-markets, down just about 0.5%. Last night we closed at $112, reaching a $250 billion market cap. Again, there are no words to describe what is going on, but it's just absolutely incredible to see some of this price action, and we are ending out the week after Palantir's Q4 earnings. We've got to talk about Palantir today. We've got Amazon to talk about today. We've got a bunch of stuff going on in regards to Amazon Q3 earnings. All the analysts upgraded across the board from the reports I'm seeing this morning. I thought Amazon had a great earnings. Unfortunately, they missed very barely on some key metrics. They did increase their CapEx, which is very good for NVIDIA. We'll talk about that as well. And that's, kind of the story that we're seeing on Amazon. We'll talk about money market funds. We'll talk about some macro data, and we got a bunch of other earnings and companies to discuss as well. So good morning. Thank you everybody for being here. I want to quickly get into some of the macro data and just get into it. We got Neil Kashkari on CNBC. He's doing an exclusive interview around the data that we just got 10 minutes ago for non-farm payroll. So this is the data that we got. Non-farm payrolls coming in at 143 versus 175,000 expected. The unemployment rate comes down to 4% from 4.1%. This is kind of bullish because we have unemployment coming down. So that means it's better because people have jobs. They can spend money. It's kind of bearish because if people have that money and they have those jobs, inflation's not coming down anytime soon. And what really surprised me this morning as well, and this is another argument for why we're probably not getting a rate cut. And maybe inflation can come down regardless of this, but a rate cut's going to be hard to get if the labor market's not cooling off. Look at the December jobs report. They revised it up from 256,000, which none of us even believed that 256,000 number, to 307,000. Non-farm payrolls in December. Remember, we had the jobs report back in January, and no one really believed that we added 256,000 jobs. Apparently, we added 307,000 jobs, not only 256,000. So, I mean, these numbers are kind of hard to conceptualize and understand, but nonetheless, that's the jobs data that we have this morning. Markets are slightly selling off, nothing too crazy in terms of how the markets are interpreting it, but it's definitely data that matters when it comes to inflation in the Fed, but ultimately we have no idea how the Fed is going to react to that. Let's hear from Neil Kashkari. We'll get back into all the stuff we're doing, but he's live right now, and see if he thinks these job numbers are bullish or bearish.
Unemployment rate ticking down to 4%, but by the way, the revisions on the other side, I don't know how much you think that offsets things. Take a look at the futures though right now. You're looking at the Dow up about 2, 3, 4 points, moving around. NASDAQ though down about 10. The S&P 500.
Thank you, Andrew. We are pleased having a conversation about the gap between what the Fed has been doing in terms of lowering interest rates and the behavior of the 10-year. And I'm wondering, as a Federal Reserve policymaker, a guy who used to work at Goldman, used to save the country working at Treasury or help save the country during the great financial crisis, what you make of the behavior of the 10-year, how worrisome is it to you as a policymaker? Of course, now it's eased back a bit from where it's been.
It's not worrisome, but it's important to try to understand what's driving it. So I and my colleagues spend a lot of time trying to dig into the details to understand the moves. As you know, since we started cutting rates in September, the 10-year didn't go down, it went up. Right now, it's up about 80 or 83 basis points relative to where it was when we started our cutting cycle, which is counterintuitive. When I dig into the data, around 40% of that move is in inflation compensation, which ultimately we control. You might interpret that to say markets saw a more dovish than expected Fed and then boosted inflation compensation a little bit. I'm not worried about that. We will get inflation down to 2%. We're committed to that. The balance, the other 60% of it, is really about real rates and what's driving long real rates. There are a couple explanations that I'm focused on. One is I think there's great uncertainty about where the neutral rate is. And the longer the economy continues to exceed expectations on growth and resilience, I think people and markets are taking signal that the neutral rate may be higher. And then you've got the residual, or what we call the term premium, that a lot of things go into that. One possibility is fiscal deficits, larger deficits, all else equal, would tend to tick up the term premium. And so where does this all shake out? We're going to get inflation back down. But then ultimately what the executive branch and Congress do on the fiscal side, and ultimately what our growth trajectory is, are we in a period of higher productivity and higher investment? That would tend to push up long rates. And so how that nets out, we're just going to have to wait and see, but we're going to get inflation down.
Neil, I want to come back to the 35 questions I have over what you just said in a second. But people right now at this moment are trying to make sense of some enormous numbers that were just laid on them. 300,000 plus in December, revision up. 149, a touch below, but right around consensus for the January numbers. Huge revisions on the household side, big down revisions on the establishment side. How do you make sense of all this? Tell us where you think the job market is right now, since you have a mandate for low unemployment.
Yeah, I think of all the data that we just looked at, that you just mentioned, and I have to go through the details, I think the most important one is 4.0% unemployment rate. This is still a good labor market. It's not as hot as it was a year or two ago. And I validate this data by talking to businesses all around the region and around the country. And overall, the feedback that I'm getting is the economy is strong, businesses are optimistic. It's a cooler labor market than a year ago, but they're still having to work to find the workers that they need. And so I think the economy's in a good place. We want to keep it there while getting inflation all the way back down to our target.
Neil, it's interesting you say what you said, because a wise person told me once that you can look at all the data you want on employment, and maybe the one thing you really need is the unemployment rate, and that tells you exactly what's going on. So that really dovetails nicely with that. And Neil, before Becky, I did it again. I'm sorry.
We had a Betsy.
Wow.
I'm sorry.
I heard about this.
I heard about
I heard about that. I wasn't here.
Never mind. Before,
Oh, I want to hear about
But he
that.
also has a producer named Betsy.
and I was emailing her at the time. Now I gave myself a jinx. Okay, Becky, Joe, and Andrew, real quick. We had a weekend full of drama, Neil, when it came to tariffs. How did you spend? What were you thinking over the weekend about the impact of potential tariffs? They're delayed now for 30 days. How does that affect your thinking about where policy can and should be?
It reinforces my view that we're in a good place. My colleagues and I basically have said we need to wait and see. We don't know enough information about what's going to be announced. We have a little more information now on that. We really don't have information about what will actually be implemented and how other countries are going to respond. And in that environment, we shouldn't guess. We should just wait and see. And then the good news is, as we just talked about, the economy's in a good place. So we're in a very good place to just sit here until we get a lot more information on the tariff front, on the immigration front, on the tax front, et cetera. All of those are going to be important.
So what's the next data point you're watching for? Or is it watching the headlines and kind of seeing how it all plays out?
Well, setting aside the policy uncertainty that I just mentioned, the other big question is, we've seen potentially residual seasonality in the inflation data in the first quarter of the last couple of years. Is that going to be repeated? Or if you look at the last 9 months of inflation data, it's very encouraging, but first quarter of 2024 was very hot. Is that hot period going to be repeated, or is that going to roll off? If that rolls off and the recent inflation data continues, then we should see rapid disinflation in the numbers in the first half of this year. And so that, for me, is setting aside the policy questions. That, for me, is what's of paramount importance right now, the first few inflation prints that we get.
All right, so some pretty dovish talk by Kashkari. Good morning to everyone. Thank you for joining in. Essentially, he's saying, look, we are still committed to getting inflation down at 2%. We believe that we have the tools to be able to get inflation to come down at 2%. He is also signaling that the labor market is very strong. Unemployment rate, for those that are just joining, came in at 4%, down from 4.1%. We got an upwards revision on the jobs number from 256,000 to 307,000. So we have plenty of jobs in the United States of America. I mean, it's not like we're struggling, at least based on this data, to necessarily get jobs coming in. And then non-farm payrolls came in at 143 versus 175 expected. I think the reason markets aren't reacting to this negatively or positively is because unemployment came down, which is good, but non-farm payrolls weren't a massive beat, as in they weren't like 200,000 jobs versus 175, which would mean that we probably have a lot more inflation for longer. So non-farm payrolls coming in slightly down, even with the unemployment rate going down, I think is kind of a wash on the bullish or bearish side in terms of good news being good news, bad news being bad news. And you kind of just get a market that's like, all right, cool. We will move on to just focusing on the earnings data to be able to come to our conclusions on what's going on. So cool stuff. I mean, look, January, we had CPI, we got through it. February, we got non-farm payrolls, we're getting through it. And we will have January CPI, I think, next week on Wednesday. But outside of that, as long as inflation is normalizing, we hopefully are in a decent situation. Robinhood right here having some love in the pre-markets, up 1.54%, 53.99. I did buy 100 shares at 53.22 yesterday for Robinhood. So that one hopefully can get over 54. Bitcoin right here, 98.8. Nice little pump from 97 last night, or 95, I think it was at last night. So you got a nice 1.3% move on Bitcoin. Nvidia's up a little bit. ELF is down 24% because their earnings weren't the best. We'll talk about that. Amazon, kind of a nothing burger to me, down 2.54%. We'll talk more about Amazon earnings, but I think Jassy crushed it. So I think this is just, the stock was at all-time highs, needed a little bit of breather, and that's what we're seeing currently right now. Let's talk about Palantir, because we haven't talked about Palantir enough this week. So let's talk about Palantir. Yes, I saw the hood upgrade. We'll talk about that. Mizuho raised it from 60 to 65. 60 to 65. So got a nice little hood upgrade today that might be helping the stock as well. Palantir's at 111. It's pretty damn incredible. The company now has a market cap of $253 billion. It is the number 40th company in the world. It is the 40th largest company, at least in the S&P 500. Via market cap. So $253 billion market cap. It is valued more than Accenture, Cisco, Toyota, Alibaba, Morgan Stanley, Merck, GE, McDonald's, Goldman Sachs, Disney, Shell, Bank of China, Pepsi, Adobe, Qualcomm, HSBC. I mean, it goes on and on and on. A $250 billion market cap is it's quite the valuation that the street has given us, but we are getting the valuation right now. So, I mean, look, the quantitatively, again, I said this last night. I've been saying this all week. There's no way for me to justify the numbers. It's obviously crazy, insane, wild, amazing, whatever adjective you want to put on it, but it's happening. It is indeed happening. And, I think 10 years from now, we're all going to remember that we were living in the moment where this was happening in front of our eyes, but it's here. It's happening, and it's here right now. Now, here's my thoughts in terms of the current price, and then we'll get into some other topics, but this is how I'm thinking about this. I think the resilience on this stock is like something I've never seen before. And quite frankly, I think everyone is getting excited about Palantir. We hit 114.25 in the pre-markets, by the way. And I think the idea that Palantir would have to go back down to 70, 80, 65 is just hard to imagine at this point, because now you're talking about almost a 50% drawdown to get to some of those numbers, or 45%, 35. And that's a hard drawdown. This week or this year, we've only had a 17.9% drawdown from like 85 to 65 at the lows in the beginning of January. And that was the extent of it. So the idea, and like every dollar it goes up, again, it just gets a little bit harder for it to come back down in regards to the perception of it not being a dip. And if we get down to 100 from 111, I mean, 10% down, that tends to be a dip, right? And if you get down 20%, that tends to be a pullback. You go down 25, 30%. If you're bullish on ELF, you kind of have to buy it today, right? Like there's no way you were buying ELF at 109 and you're not buying it at 67. That's a hell of a pullback. If this same thing happens to Palantir, we're at 111 and we fall to like 70, you kind of have to buy that dip if you were buying it at 111. Now, if you're not buying it at 111 and you're waiting for 70, then it is what it is. But the point is, I think there is so much strength and momentum in terms of the big players that are getting involved. Palantir's market cap, obviously now at 250 billion, that it's going to be hard to see a dramatic decline, which means it is going to be expensive for a long time. It's probably going to be expensive for the rest of its history. But I mean, it's what do you say? You just kind of, we talked about this a lot over the week. You kind of sit back and enjoy the ride. Sam, who was on the channel yesterday on the market close, he said, look, if you haven't sold yet, then why would you sell? Right? It's like, if you've actually held on so long, then you kind of just see the story and see the thesis play out. And if you have to handle a 30, 40, 50% drawdown, then you deal with it. But you'll probably still be in the green if you were in very early. So my thoughts on this are the same thoughts I've had the whole week. I mean, at $100 valuation was wild. At 111 valuation's wild as well. So at 120 is valuation going to be wild? Yes. But the degree to which we think of wild or insane or like crazy on the valuation scale, does it change that dramatically from 100 to 120? Not really. especially when the stock is taking a life of its own outside of just the conventional metrics that people use for valuation. So from that perspective, I continue to believe that more and more people will get excited about the name. The company will continue to execute. And as long as they do that, then you're going to see more momentum for Palantir, and you could probably see more stock price appreciation. Is it going to make sense on a pure valuation basis if we hit $300 billion in the next, at this point, 5 days or whatever? Probably not, but it doesn't make sense at 250 either. So why would it make sense at 300? Why would it make sense at 200? My point is the stock is taking a life of its own. And at this point, the entire street, big money, retail has bought into that story. Retail just happened to buy into that story a lot earlier than the street. And that's the sort of argument that we're seeing right now on Palantir. Amit has a severe bias, which is fair. Look, obviously I'm biased. I'm emotionally attached to it as well. But I also think I'm being pretty objective. Like, is Palantir really that different from a $200 billion market cap to 250? No, because both those numbers, anyone would say, like, yeah, it's really hard to kind of justify 200 versus 250. So what makes it, does it make it that much more crazier if you go from 200 to 250? Not really. The stock goes from 80 to 100. All right, at 80, everyone was saying, well, this is pretty, exceptional in terms of a rich valuation. So it's same thing at 100. So my point is just if the stock is taking on its own life and the stock is developing its own characteristics that are beyond the numbers, historically, can that be bad? Sure. We could definitely have moments where that results in 30, 40% drawdowns. It's just Palantir is such a unique situation where people have bought in so early. People have bought in. I mean, dude, someone sent me a screenshot last night of a guy of a guy in California. He bought 4,000 shares at $9, held on the whole time. It's like it's worth $400,000. It's just like, it's crazy, dude. It's crazy. It's like, and I've gotten many of these screenshots throughout the week, and I'm just like, wow, people really like held when they bought under 10 and they didn't care, and they're continuing to hold. And so from that perspective, again, if it means that it's going to get harder for big money to buy it cheap, even though they're going to try to create a dip, if no one's willing to sell, then, it will just get more and more expensive. And so that's what we got. That's what we have right here, right now. Here's what Jassy said about Palantir yesterday on the earnings call for those that missed it. Definitely got my attention.
Thousands of AWS customers are already taking advantage of the capabilities and price performance of Amazon Nova models, including Palantir, Deloitte, SAP, Dentsu, Fortinet, Trellix, and Robinhood. And we've just gotten started. At the top layer of the stack, Amazon Q is the most.
Not only did he mention Palantir, bro, he mentioned Robinhood. So I think this will, that GameStop meme where the guy gets out of his chair or whatever? I think this is going to be my meme when I hear something good about Palantir. I'm gonna try to turn it into a GIF and just post it every time I hear something good. Because he mentioned Palantir and then right here he mentioned Robinhood right there, and I was like, wait a second, Robinhood? So basically, Jassy said Palantir and Robinhood are using Amazon Foundation Nova models inside of their business. Palantir with AIP in terms of the Nova models, and then Robinhood, I'm not sure exactly what they're doing with it, but I imagine they're creating some agentic finance tools that are coming out soon, and they're using that Amazon Nova models as well. The case in point, the LLMs that Palantir has been talking about for so long that are commoditized and that you need the software to actually make them happen is kind of being proven to be true. We saw that Palantir added Grok yesterday, which was awesome. Elon actually responded to that, and Elon said that it's cool that they are using Grok, operationalizing different large language models inside of AIP via Foundry. And that's allowing more and more opportunities for bringing AI to the enterprise via these LLMs. And so, I mean, like Elon's XAI is not going to take Grok into the enterprise, but they can give it to Palantir, and Palantir could take it into the enterprise. Elon gets paid, Palantir gets paid, the enterprise gets value. That's kind of the way I'm looking at the enterprise AI stack playing out. And it's pretty exciting to see the arguments for why LLMs ultimately aren't as important as the actual platform itself. So it's cool stuff. I mean, it's cool stuff. We continue to get more and more catalysts. Palantir did win a couple of awards yesterday from the Dresner Advisory Service Awards as a leader in AI and technology. This is a consulting analytics firm that judges software providers in terms of how valuable their resources are via their surveys, and so they won a top place on that yesterday. I don't think that's why the stock pumped. At this point, Palantir has not released a single press release besides yesterday's award press release and the earnings press release for the first month and a half of the year. Right? It's like, so they don't need to show these crazy deals like they were showing last time. Now it's just a question of execution. They showed us crazy numbers, and still the stock is able to gain momentum outside of needing some massive contract because again, I think the stock is completely taking a life of its own. Rick Wong, thank you for becoming a channel member. Appreciate you being here. Thank you for being a channel member. Charles Smith, thank you for the $20 super chat. Wake your ass up a minute. Palantir is running. Palantir is indeed running. It's been running all week. Thank you, Charles, for being here. Not no way. Thank you for the $5 super chat. Kathy just rebalanced. She still has a lot of Palantir on her portfolio, just took profits. That is correct. Kathy did sell my best friends yesterday, Robinhood and Palantir. It's not really a big sell. I mean, look, she's probably just taking some profits here, rebalancing, but she did take a little bit of Palantir and Robinhood off the table last night as well. The stock was up on the Grok news. Well, maybe the Grok news influenced the stock yesterday. I just think the move from 100 to 110, that 10%, might not have only been Grok. It could have been a part of it, but like genuinely, guys, this is my genuine opinion for why Palantir is running. I think a lot of people are looking at this stock and they're thinking it's the next NVIDIA, the next Tesla, whatever you want to call it, and there's a lot of FOMO is what I'm trying to say. But that FOMO is not just retail FOMO, in my opinion, given how seismic the move has been since earnings. I think that FOMO is institutional FOMO. And with all these analysts upgrading the stock and saying, hey, there's a moat here, you missed it, you got to really understand Palantir has this unlimited trajectory, unlimited TAM, yada, yada. The institutions are realizing, all right, you know what, we'll throw a couple $100 million at it. We'll throw tens of millions, we'll throw $20 million at it and see what happens. You know, like, and when you got that type of money hitting the bid, it's just hard for it to lose support and come down. And I do think it's been re-rated again after earnings, which is why it's getting the momentum that is getting right now. They finally woke up, correct? They finally woke up. Look, it's wild. It's wild. It is what it is. It's happening. It is freaking happening. We are living through it right now. It is pretty exciting. One thing I will say, though, is that, again, it is just hilarious to see the FinTwit bears that cannot make sense of it. And it's just like, I don't know, it's kind of funny. Because, and then the reason it's kind of funny is, again, I don't think any of these people ever studied the business or ever studied the CEO or studied the, I mean, in fact, they completely wrote off the CEO. They said Alex Karp was freaking crazy. They said he's insane. They said when he, you know, has his soliloquies on CNBC where he's talking about short sellers, that this guy should be arrested. He has no idea what he's talking about. He's, you know, they just completely degraded the name, the thesis, the brand, the CEO. You had people like Ross Gerber saying horrible things about Karp. And then when it got to 40, 50, they only looked at price to earnings or price to sales and concluded there's no way the stock can possibly continue to gain momentum. I'm not saying at 50, you shouldn't look at PE and price to sales and EV to EBITDA and all those things. I'm just saying when it comes to momentum trading, the idea that we don't look at other ways and other qualities and factors of how the stock should be analyzed is absurd. Like, of course you look at that stuff. That stuff is what you got to look at when it comes to trying to analyze a business in its totality. And I think the reason retail got Palantir is because we actually did spend time looking at the qualitative stuff when it was $6, $7, because there was really no good numbers to look at because the numbers sucked. So you kind of had to dive deeper. And because of that, deeper understanding of kind of how this is playing out. Now, there's another argument right here that I want to show. This is like a 3-minute video. The Dean of valuation, for those that love valuation and for those that swear by it, this is like kind of the guy when it comes to valuation. He went on the Prof G podcast and he said it's kind of hard to say that Palantir is necessarily overvalued.
You mentioned Palantir there, which just had a blowout quarter. It is now the 49th most valuable company in the world. It's up around, I want to say 1,500% in the past 2 years. I kind of expected you to walk in and say it's way overvalued, but you sound a little bit bullish, maybe.
I'll be quite honest. Usually I never say never with a company. I view it as a challenge when a company. Palantir is the one company that I kind of hold off on fully valuing because I'll be quite honest, I have no idea what they actually do. And I'm terrified to ask in case I might end up in Guantanamo Bay because it's the nature of what they do, and especially on their defense, secret service side but if you were building a prototype of a premium AI product, it would look a lot like Palantir, right? It would be data that is exclusive to you. It would require intuitive components to the data because they're trying to second guess what might happen they're gaming out wartime activities. You can't just feed it rules. You got to feed it you need supercomputers and you have very sticky customers. right? Because once the Defense Department chooses you, it's not like a competitor can come and say, I'll offer 20% less, because there are all these links you built in that are almost unbreakable. So does it justify a 1,500% price increase? I don't know, but I'm willing to listen to somebody who says it is. But as an investor, I need to at least have at least a sense of what a company actually does that makes it unique to be able to bet on it. And Palantir has always been this bridge too far for me. It's one of the few companies in the world where I look at and say, interesting company, fascinating. But as an investor, I can't buy you as a business because I really don't know what you do. I could trade it, but I'm not a trader, right? Trading is just looking for a higher price. Momentum can carry you there. But to me, it is exactly the kind of prototype for this premium AI market that I'm thinking about, where there will be companies that find a space like Palantir and then harvest that space to make as much money as they can.
And again, this is crazy, dude, because Aswath, he thinks NVIDIA is overvalued right here. And he just sold the rest of his NVIDIA shares. He put out a note the other day and he sold half of his position because of DeepSeek, which is, again, I didn't agree with that. But nonetheless, this guy has been he is one of the guys people look to when it comes to understanding valuation. He's a professor at New York University. He's built a very strong personal brand. So people really care about him when it comes to talking about valuation. The fact that even he says, I just don't know enough about them to say there is a limit to how much their market should be capped in terms of their market cap, because I don't understand what they do and I don't understand their TAM. And maybe it really does justify a higher multiple, even if not this multiple, but definitely a higher one. He's being honest about it. And he's also admitting that Palantir, quite frankly, is a unicorn, because it is really hard to gauge what is the potential or the limit on this company at the end of the day.
Do you think it's possible that the rest of Wall Street feels similarly as you do, and therefore that's why we're seeing this price increase? Because is it possible that basically most of Wall Street doesn't really understand what Palantir is or does, and that's what kind of excites them about the company?
And that's the difference between investing and trading. Investing, if you don't understand a business, you can't put your money in. Trading, all you need to do is a momentum in your direction. So if you believe there's a big enough story, and as long as there are enough players who believe the story, you're going to be able to sell at a higher price. So Wall Street may be trading on the fact that Palantir is one of the few players you can point to and say, that guy has a premium product. Other people think like me, because you're just making guess on whether other people stay with the herd. So I believe that Palantir is one of the few companies with a tangible product or service that you can point to and say, they'll find a way to make money on it because it is unique and different.
We need to get the department.
So that's what you got in terms of the Dean's argument when it comes to Palantir as well. All right, we got 15 minutes left until the market open. We will see what happens to the stock as the market opens. Put in the chat what you think. Do we pump, or do we take a little bit of a breather today? We're at 111.85 right here on Palantir. Dude, if I had to guess, I would say we keep pumping. I don't know if we get to 115 or something, but at least in the pre-markets, there's not super signs of it slowing down. Now, granted, when 9:30 opens, there might be tons of sell orders that are ready to just exit as soon as we open up the markets. But if we sell off to 105, is that, it's all right, I guess that's a sell-off, So I don't know. I think it can continue. We got non-farm payrolls data that was relatively decent. Grab is up 1.28% as well. I don't know why they're up, but they're getting a little bit of action in the pre-markets. Robinhood as well, up 1.84%, above 54.15. Nice on Robinhood. And then Palantir right here is at 111.79. Let's talk about Amazon. Amazon right here is down 2.84%. I'm seeing more pumps than dumps in the chat. So it looks like people are bullish that Palantir will continue its momentum. Bitcoin as well right here, 99,827. So nice for Bitcoin, maybe getting back to that $100,000 range. Amazon. So Amazon's down because they missed on cloud and they missed because of FX headwinds. The call itself was great. I listened to the call last night. It was pretty much exactly like the Q3 call, nothing too different other than their CapEx guidance. I don't think TJ is coming on today, guys. He's in New York, and I believe he's traveling home today. So TJ is likely not coming on, but next week TJ should be on because he's probably either on a flight right now or traveling back to Texas from New York. These are the CapEx numbers we're getting from Amazon. $105 billion. $105 billion. Which means when you add it up with Microsoft, Google, and Meta, CapEx is going to be $325 billion in 2025. Bullish Nvidia. I mean, like, this is like not all of it's going to Nvidia, but whatever it was supposed to go in terms of the allocation of spend to Nvidia, it just got increased as a percentage of the growth rate from last year to this year, because all of these companies increased it. Amazon beat by 25% in terms of expectations of how much CapEx they were going to spend. So DeepSeek did nothing. I mean, DeepSeek did nothing. And if NVIDIA never gets back down to the 115s like it was at for basically 5 days, 115 to 118, then that would have been the best opportunity ever to get NVIDIA outside of August 5th. Now, granted, NVIDIA's got to put up the growth to, prove that it's the best opportunity ever by getting into the 150s, 160s, 170s, which I think they can by the end of the year. But nonetheless, it looks like it was a sweet buying opportunity because CapEx is not slowing down, at least for 2025. So Amazon crushed it, in my opinion. They increased their CapEx, which is probably another reason the stock took a little bit of a hit because investors didn't expect that much CapEx. But then again, the reason they are spending this much CapEx is because they obviously think there's an ROI. Amazon also, they compounded AWS at 19% year over year. Just exceptional growth, $100 billion run rate on AWS. Just insane. And as a result, the street is upgrading the stock today. No one's bearish about it. Deutsche Bank, 287, buy. Rosenblatt, 287, buy. JMP, 285, buy. BMO, 280, buy. DA Davidson, 280. It goes on and on and on. All of these guys, overweight, outperform, buy. Overweight, outperform. I don't see any sells and I don't see any holds. All of them have a upgrade price target. The median price target is now 270. The highest is 287. The lowest is 207. 17 have raised their price targets and 6 of them have lowered. So you have sort of unilateral consensus across the street that this was a phenomenal quarter and it deserves to be recognized. It's just the stock was trading at all-time highs. It's hard, right? When you're same thing with Google. When you're trading at all-time highs, it's going to be a little tough to continue to get that extra edge if you miss on certain metrics, and you're going to miss because it's like the expectations are also really high. But overall, I think Amazon crushed it. I have covered calls on Amazon at 255. I don't know if they're going to be printing today because Amazon's down 2.7%. Maybe they print. If so, I'll close them out. But I still have long calls on Amazon and Google that I'll be looking to exercise in 2026. So overall, I think Amazon should continue to do well going into the rest of 2025. I mean, AWS is just not slowing down. And that was what people cared about. As long as that's not slowing down, we are going to be in a strong situation. OpenAI set to receive a $40 billion investment from SoftBank. Yes, that's probably happening. We talked about this a while ago that OpenAI is likely getting this investment. I wonder what the final valuation is on that. It's probably going to be $340 billion. 260? It's going to be at 260? Oh, that's way lower than the amount that was expected. Hold on, let me see. Yeah, 260 billion. Huh. I heard it was 340. That's actually a much more reasonable valuation here. 40 billion at 260. Huh. Wait, hold on. No, but that's pre-money. So it'll be 300 billion post. Yeah, so I would assume it's more 300 billion versus 240 or 250. Okay, cool. So, I mean, when that goes through, we will discuss what it means for OpenAI. But I do think OpenAI is working on other stuff besides the large language model if they're getting $40 billion from freaking SoftBank. It's pretty incredible. Robinhood right here, 54.19. Real quick, the Robinhood upgrade that we got this morning was from Mizuho. Mizuho is essentially thinking, hey, we think that their crypto trajectory is strong. We think their overall growth in the Q4 was very strong. And then they think sports betting is actually going to be something that does very well for Hood. So they did a survey of 107 users and they asked those users, would you like sports betting? And 2/3 of them said they already use mobile sports apps like DraftKings or FanDuel, and that the vast majority of surveyed Robinhood users indicate that they would use Robinhood for sports betting if they allowed it. So raise the price target from 60 to 65. Do I think Robinhood's really going to get into sports betting? Not really. I mean, I think they're going to try to get into sports contracts via the derivatives on event contracts, but the CFTC already shut that down in terms of the Super Bowl. So they weren't even able to allow people to bet on the Super Bowl. I don't think they're going to be able to get people to bet on if LeBron's going to score 20 points next week in a game. So I don't think sports betting is coming. I wouldn't mind if it came. I wouldn't care. I mean, like, I wouldn't do it, but if anyone wants to bet on sports, then bet on sports. But I don't think Robinhood is going to go down that route. I think there's just too much regulatory struggles they have to deal with to be able to get that to happen. So I don't think that's probably going to be anytime soon. But I think they're going to have other features and other products that are going to be important. Bitcoin trying to get back to 100, 99.7. Oh, it did touch 100. All right, so we touched 100, got rejected right at 100. It looks like we can get right back there, 99.784. on Bitcoin. In terms of some of the other earnings we had yesterday, we had Expedia, that's up 12%. They beat Doximity, 21%. They beat Billings. They missed badly, down 33%. Take-Two Interactive, Grand Theft Auto is on the way. That's up 7%. Monolithic Power, they beat, up 5%. CleanSpark is up 10%. I mean, like, that's nice for CleanSpark being up 10%. Again, I think Bitcoin's got to either do a dramatic move or the company's got to start buying Bitcoin on the balance sheet via 0% coupons. But I don't really know what's going to move CleanSpark intensely. But it is up 10% after they had earnings. I just think there's got to be a more dramatic thing the company does to get the stock to turn around. Fortinet right here is up 7%. Cloudflare is up 10%. Affirm was up 12%. This is great for the consumer. Affirm is really good at underwriting. Affirm is very good at being able to manage high interest rates in regards to their buy now, pay later product. And Affirm is profitable. So Affirm, from a question of profitability and from a broader question of actually being able to survive in a interest rate era when it comes to underwriting loans via buy now, pay later that can be very risky, Affirm is crushing it. So shout out to Affirm, up 12% right here. Incredible earnings. Amazon down 2%. Pinterest had strong user growth. They were up 20%. My swing trade should have been Pinterest versus Snapchat because Pinterest looks like it's actually holding its 20% gain. So if you're in Pinterest, congrats. That's up 19.9%. And then Elf tanked down 25%. I don't know if Elf is a buy the dip. I don't know. Let me know in the chat. Do you think it's a buy the dip? The problem with Elf here is that here's what management said about Elf. And this is what got me kind of confused about their overall earnings. Management said, we are seeing less people talk about us on social media, and that is contributing to a decline in overall sales. And in my opinion, I'm like, okay, wait a second. Are you guys are relying on TikTok to, like, I mean, they literally said the TikTok ban hurt our sales. I'm like, what? Like, so the brand is so fragile that it needs people commenting on TikTok and making videos just to drive sales. Like, that feels to me that there is a lot of competition in the makeup and beauty space, and you guys are not a clear differentiator if you need TikTok to be able to market yourself. Again, I love Elf management. I love the company. I think that the growth has been exceptional since 2020. The CEO, amazing. Like, I love listening to their earnings calls in terms of how they discuss their ideas and thoughts and projections, and they're so nice to analysts, and they actually give detailed responses. The problem is, if there's a China headwind overall, and then there's a TikTok headwind, and then makeup is not doing as well on TikTok or Instagram Reels, I don't know, bro. That's weird. That's weird. I don't know how you buy that dip. I think there's got to be a lot more to kind of figure out what's happening here. Now, granted, it's down 25%. So usually when a stock's down 25%, it tends to be an overreaction if the company is a good company. And I would say Elf is a good company. Their guidance also wasn't horrible when I looked at the numbers. It was a little bit lower than expected, but it wasn't horrible. It's just that decrease of full year sales plus the TikTok thing is what has people wondering, what is the story for Elf? Ulta Beauty as well right here. This one's down 2.6%. And then Estee Lauder, that one's up 0.45% here right now. NVIDIA is up 0.24% as well. So I don't know. I'm not buying the dip on Elf. I don't know enough about the numbers. It's a $4.9 billion company. I think it's not a crazy candidate to sell some puts on if the put premiums are juicy, but you got to have an understanding of where do you want to be assigned on Elf. And although I think there's going to be a bounce, I think 25% is enough. Like, that tends to be enough pain for a good company. We'll see in about 4 minutes how the stock opens up and where it goes from there. But yeah, that one definitely got kicked last night. Does Amit use Elf products? I do not. I do not use Elf products. Chris Camillo called it, bro. Camillo called it. Camillo's been saying for the past couple of weeks he is bearish Elf. He just does not think this thing can hold up. He looks at a lot of data. Ironically, he looks at a lot of social data because he trades on like social arbitrage to see what are people talking about. And his argument was kind of what management said, that it's kind of dying out on Elf. So makes sense that this one's down 25% here. Non-farm payroll numbers are fine. Yes, for those that are just joining, non-farm payroll numbers came out this morning. Numbers are relatively good. 143 versus 175,000 expected. Unemployment rate came to 4% versus 4.1%. So kind of a nothing burger. Neil Kashkari was on CNBC reacting to it. He also, didn't seem like it was necessarily good or bad. It was kind of just flat. So nothing too crazy to out when it comes to those numbers as well. Did Jason take a position in Elf? I don't think so. I'll ask him. I don't think he did. I don't think he had one before earnings. Maybe he's interested now, but I don't think he had one before. Amit, any insights on CleanSparks? I don't understand this company that well, but my only beef with CleanSpark, and along with all the Bitcoin miners, is that Bitcoin has doubled since the beginning of 2024, and the miners have kind of stayed flat. And so I just don't know if the business model is that exciting when it comes to the miners. They're great for wheeling, like TJ does, print premiums on wheeling Riot with covered calls and puts. But in terms of buying it to get share price appreciation and see it go up, it's tough. It's a little bit tougher to see, just given Bitcoin's made its move. It happened, 100,000. It's here. And still, some of these miners cannot get any love. So I don't know. From a business perspective, I'd rather buy anything that can capitalize on Bitcoin's gain. Honestly, Robinhood, it is the company that can capitalize off crypto without being beholden to crypto. And you actually have a real business that's executing underneath it. Or Coinbase, right? Although I like Hood more than Coinbase, Coinbase benefits off crypto as well versus the miners that, just can't seem to catch a bid, even if Bitcoin goes up a lot. Roblox is down 0.5%. Broadcom's up 1.79. Google's down 1/3. Marvell's up 1.87, probably because Amazon said they're spending on CapEx. SoFi is up 1%. SoFi's sentiment is the worst I've ever seen, quite frankly. And as I just scroll through Twitter and try to see what's happening with SoFi. Oh, Noto responded yesterday. Someone tagged Noto in a post, and I don't know, dude. It was just a weird answer the way he responded to it. But someone was like, "Hey, Noto, are you seeing that retail sentiment sucks right now?" And Noto was like, "Yes, we're going to look into it." I'm just like, it was the most corporate Goldman Sachs banker response. It's like, "Yes, we are paying attention." Someone tweeted, "Hey, SoFi sentiment on retail is bearish." This guy tags him, "Hey, are you paying attention?" Noto says, "Yes, we are paying attention." And I'm just like, what is, like, it's just, it just feels so corporate, dude, so rigid. It's like, yes, we are paying attention to the fact that our retail shareholder base, that is the one that's buying the stock, really hates the stock right now, or hates that the company is in a situation where they can't grow their tech platform. It's just like, it just doesn't sound like a human. It just doesn't sound normal. Like if Vlad was responding to that, you would have had some emojis or something, or Vlad would have had lowercase letters instead of all capital letters. Like it's just not natural, in my opinion. And so I don't know. Do I think SoFi deserves to go back down to 13? Of course not. I think SoFi is probably 25 by the end of the year, but the sentiment on it right now is really interesting. And I guess we're going to see how it plays out towards the end of 2025. All right, here we go. All eyes on Palantir. It is Friday, February 7th. Thank you, everybody, for being here. It has been quite a week and quite a journey. 9:30 a.m. The stock market is now open. Wake your ass up. Here we go. Palantir opens slightly red, 111.05, down about 0.24%. Yeah, we are red. So we got some sells coming in, 110.68. Again, we pumped up 10% yesterday. Wouldn't be crazy to see a little bit of a breather, but we're going to see throughout the day kind of how that plays out. Down about 0.5% right here on Palantir, 110.70 on the day. So we have some sell side pressure coming in. ELF down 27%. That one is not catching a bid. It was down 25%. Now it's down 27%. We might see some Friday profit taking across a lot of these names. CleanSpark up 14%. Ulta is down 3.39%. NVIDIA maybe heading to 130, 129.2. Wow. Robinhood 54.60. What an open. 54.70 on Hood. Maybe she wants 55 today, up 2.65% on Robinhood. Bitcoin, 99,500. Amazon down 2.73%. Palantir still red, but recovering a little bit, 111.17. That's up from 110. Grab is up 1.7% or 1.39%. Not bad for Grab. Roblox is down another 3%. Google's down 0.5%. Marvell's up 2%. CrowdStrike's up 1%. CrowdStrike, new all-time highs, baby, on CrowdStrike. So congrats to everyone in CrowdStrike. SoFi, nice reversal, up 1.2%, $14.99 right here on SoFi. So not bad, touching just above 15 as we get into the market open. Tesla, I did buy 10 shares of Tesla yesterday at 367. Tesla rebounded to 372. Their China numbers came in a little flat on the day, or a bit down. China numbers for Tesla, let me see if I can. Oh yeah, 63,000 in January, down 11% year over year and 24% month over month. So Tesla China numbers were down year over year and month over month, but Tesla is turning green right here, 374.5, even with their China numbers down 11% year over year. Reddit 220, new all-time high. SMCI up another 3%. Look at that. Maybe it's going to 35, 34.93. It looks like it's going to 35 right here on the day. Nvidia 129.3. Wow, Robinhood 55. All right, there we go. Shout out to the Hood 55. We got to ring the bell for Robinhood. Wow, that there you go. That happened pretty quick. I mean, Yeah, that came with some vigor right there. 55 on hoodie, grabs at 474. Tesla goes green, and then Palantir back to being green, baby. Back to being green. 112. Nothing stops the kid from crushing it. 112 on Palantir and 55 on Hood. Both of them hitting essentially all-time highs. I mean, Hood's all-time high is 80, but that's from 3 years ago, so I don't really count that. But basically all-time highs. Basically all-time highs for both of these stocks. You cannot slow them down. You cannot. Wow, Robinhood's really pushing 55. Oh my goodness. 55.30. You know, I think we've been talking about this for the past couple of weeks now, right? That Hood's kind of having maybe its Palantir moment. You know what Vlad said yesterday? Vlad said they are doing the Q4 earnings call on video, baby. Basically, I think Vlad's looking at what's happening with Palantir, and he's like, yeah, there is no way. That's what I love about Vlad, dude. He's freaking competitive. He's competitive. He's probably seeing all the hype around Palantir's earnings call, and he's like, you know what? We got to do the same for us. Nubank just touched 14, 13.95, up 1.23%. NVIDIA is 20 cents away from 130. 20 cents away from 130. This is. I'm going to be proud of the NVIDIA one. I'm going to be proud of the NVIDIA one because this one I actually put my mind to buying the dip, did some research, said this is stupid. This opportunity needs to be taken advantage of. So anyone who buys the dip on NVIDIA, 130 is going to be a little bit of at least a proclamation that this was an exceptional company, that there was no reason to sell off like this. So let's see if we can get there. 10 cents away. Robinhood 55. Where's Palantir? Just going red on the day. So it touched 112. Now it's down 110.86. NVIDIA 2 cents away. Let me see resistance. I think it's going to happen. 129.99. 130 has, oh, there you go. 130. All right. We got to ring the bell for 130 on NVIDIA. Wow. Talk about a nice Friday, huh? Talk about a nice Friday. Where's Meta? Where is Meta? Meta 721. All-time highs on Meta. Holy freaking crap. And then SoFi, back to 1510. That's up 2%. ELF is getting a little recovery from 27% down to 25% down. Bitcoin trying to get to 100,000. The Qs are at 531, almost an all-time high. Grab, I don't know what's moving Grab today. Honestly, I don't know. I don't think there's any headline that's moving Grab. But you got Grab up a little bit right here, so that's nice. NVIDIA just below 130. Nubank 1390. Meta 722. My goodness. I guess people are selling off Google and they're buying Meta. Where's Amazon? Amazon's still red. Is Google red? Google is also slightly red. And then CleanSpark, shout out to CleanSpark, up 15%. So that one's moving. What about Riot and Marathon? Are they getting any love? Riot's up 4%, and then Marathon as well is up 4.2%. ELF still down 25%. NVIDIA 129.60. Robinhood still at 55. And then Palantir here at 112.28. Again, green. Oklow's up 10%, and Affirm is ripping. Affirm is 20%. Congrats to those who have Affirm. This is they had a good quarter. They deserve it. They had a great quarter. They absolutely deserve it. Affirm right here up 20%. It's also really good for the consumer. Max Levchin, an incredible founder, PayPal Mafia. That dude is amazing. I mean, he deserves this. He went through a lot of hell in 2021. So it's nice to see the company get back to where they belong. Oklo right here up another 11%. It's pumping with NVIDIA. Well, let's check out VRT. Vertiv, that's up 2%, pumping with NVIDIA. VST, that's down. It was up this whole week, so it makes sense that it's taking a breather, but that's at 169. That's Nancy's stock. Where is Oracle? Oracle right here is at 176, up 2.6%. And then AMD is down. Okay, that sucks for AMD. Sorry to the AMD. It's not pumping with NVIDIA. I don't know why that's, well, there you go. Amid, didn't they cut rates in India? Is that the Grab pump? Well, Grab doesn't have India exposure. So I don't think, yeah, Grab's in Southeast Asia. So India is in South Asia, but it's not Southeast Asia, right? So that's not going to have that big of an impact. I mean, there could be a marginal impact from India cutting rates. I didn't even know India cut rates this morning. So you're telling me for the first time. I'll pull that up in a second. But I don't think that's affecting Grab. I don't know what's affecting Grab, to be honest. It's just getting a little bit of, maybe it's a pre-earnings pump. You know, they have earnings in a week, so maybe some people are just buying in for that. Palantir 112.8. Let me check resistance at 113. Or sorry, 112.97. We have 3 cents until 113. That would be an officially a new all-time high for Palantir. We did hit that in the overnight markets, but that kind of doesn't count. So let's see. Oh, there you go. 113. 113. $113 for Palantir. We got to ring the bell. Jeremy says, dude, this is wild. That is correct. Dude, this is absolutely wild. And we are well above 113 at 113.3 right now. I mean, Nike, by the way, down 3%. Don't know why Nike's crashing. They did get a downgrade today from like from 110 to 70 in terms of the price target. I think from like JP Morgan or one of the big guys. But yeah, I don't know if that downgrade is the reason, but they are down 3% right here. Palantir is putting on its Nikes and running in this case, and it's not running down, up 1.5%. Just exceptional. I mean, just incredible. Just incredible. But what's better than 113 is 114. And so let's check resistance at 114. 114 resistance on Palantir is 81,000 shares. 81,000 shares. I don't know, dude. It's fucking wild. It's just crazy. It's crazy. There's no way to explain it. It's crazy, but it's happening. Citi, by the way, downgraded Nike. Citi downgraded Nike. They said, we attended a sell-side event to meet with the new CEO, Elliott Hill, after discussing the key building blocks and challenges to achieve a turnaround. We no longer believe fiscal year 2026 will inflect the way we hoped. I wonder if Bill Ackman is dumping right now, because if Bill Ackman doesn't want to stay there for a long time, again, 16 million shares, he might just end up dumping and transitioning. So we'll see in his 13F probably in a week if he dumped, but it looks like Citi talked to management and they do not want to stick around for a transition year for Nike. Affirm up 22%, SoFi 1521, that's up 2.4, Palantir 112.6, and then Hoodie above 55. Again, Vlad is having the shareholder meeting in video. I think they're realizing that the Palantir momentum is incredible. They want to probably replicate some of that in terms of their retail investor base. Every company, in my opinion, wants to replicate that in terms of their retail investor base, because it's very powerful to have a retail investor base that actually gives a shit about your company. And I think they're embracing it. And this is what I love about Vlad. He realizes that this competitive dynamics in the marketplace. If you want to be relevant, you've got to actually show up, and showing up on video is one of the easiest ways to get people to connect and relate to you. And also the last earnings call, he got feedback it was really boring. I mean, everyone said like the call sucked, like there was delays in the audio. It was just horrible. And it's not, if you're going to be an exceptional company like Palantir, you got to be able to live up to some of that stuff. And I think he's realizing, we might as well do that. So nice evolution in terms of what Robinhood's doing on the call. And I think that's getting the street excited as well. And also, I don't think they would have a video call if they had crappy numbers. I think I think they're going to have some pretty damn good numbers. And they continue to innovate. Hims right here up 6.6%, 43.15. That's incredible. Shout out to Hims, continuing to hit all-time highs. Oklo up 14% now. My goodness. Oklo, what a day. SMCI as well, doing great. That is 5.7%, 35.83. We've got earnings on SMCI coming up next week. I still have my calls. Hopefully those calls I'm now up $1,000 on, 17%. Bought them at $11.50. They're worth $13.50. Hopefully SMCI can crush it going into next week. Rocket Lab is up 4% as well. There you go. Rocket Lab joining the party. 29.05 on Rocket Lab, up 5% now on the day. Meta, just incredible, dude. 722. That's crazy, dude. That is wild. And Palantir is not giving up 112. I mean, it hit 113. It looks like it's going to go back to 113 pretty soon. It is not giving it up. This is pretty wild. Pretty freaking wild. Adam says Carp and Vlad fighting for Mitt's love and the community love. No, that's not. They're not fighting for my love, but I think Vlad just realizes, like, it's time. You gotta really embrace it. If there was any company that could pull a Palantir type of move in terms of stock price, I think it's Hood. I think they got the growth to justify it, and they have the beginnings of a retail community that they're embracing to justify it, and they have the tech and innovation and the product culture to justify it. And in this market, you need the product culture. And then I guess the common similarity is me. So they've got my love trying to help push them to the finish line and keep this thing going. But this is amazing, dude. This is just amazing. Absolutely incredible. Palo Alto's up 4.5%. So that's probably up Fortinet's earnings. Palo Alto 195.81. That's probably why CrowdStrike's pumping as well. Fortinet had a great earnings. They beat on the top and the bottom line. CrowdStrike now 430. Fortinet, their earnings were really good. They're up 4% right here. 108.82 raised guidance as well for Fortinet. Costco, by the way, why aren't any of the valuation people complaining about Costco? Why are they complaining about Palantir? Costco trades at a 62 PE. Do none of the valuation people want to complain about Costco? Do they just want to talk about Palantir all day? But shout out to Costco, 1,054. I mean, like, it's incredible, dude. Market's willing to pay these premiums. Inflation's coming down. Earnings growth is good. Oh, Costco sales came in yesterday as well. January sales, I think they were up 9% year over year, which is probably why Costco pumped. So Costco not slowing down in terms of its numbers. What's funny is Palantir is worth half of Costco. So it is what it is, dude. A unicorn gets a premium. Palantir 112.76 here right now. And Costco has 100x the employees. Yeah. Well, Costco's not a tech company, but it's still wild. Palantir is doing this on less than 4,000 employees. 4,000 employees, bro. I mean, or sorry, Palantir. Yeah, Palantir is doing this on less than 4,000 employees. I think it's 3,800, which is just insane. Uber right here, 72.19. That's up 3%. You know, last night I was watching Karp talk at AIPCon in September, and it just randomly popped up, and I was watching him talk about how they getting into the S&P 500, and he was pretty emotional. You know, he was just saying like this was the biggest event in our history. No one thought we would do it. I can't imagine what he's feeling right now that the market's giving him this type of valuation. Now, remember Karp at Davos 3 years ago did say there will be moments when the market overvalues us and undervalues us, and it is what it is. I would imagine at this situation, Karp's probably thinking, all right, the market's really giving us a premium valuation, and that's up there. However, I also think Karp's thinking, mother effer, we deserve it. We went through hell for 20 years to build something that matters. We're one of the only companies that actually gives a crap about our customers. In this case, he calls them partners. He hates calling them customers because they are genuine partners. And in his head, back to 113 on Palantir, I think he's like, screw it. You can talk about valuation all you want, but if the street thinks we're worth it, we're worth it. And if retail doesn't want to sell their shares they bought at 7 because they still believe, then that's why the street has to pay higher. And it is what it is. And I just kind of, I kind of love it. I kind of love it. I think Karp's just sitting in the back saying, we're building something that's useful. The market can value it however they want to market it. And right now they're valuing it in a pretty exciting way. And that's some momentum that we're seeing right here. HIMS is up a little bit right now as well. HIMS at 43.95. That's up 8.6%. Rocket Lab up 5%. SMCI up 6%. Oklo just crushing it, dude. 18%. This stock is up more than 100% year to freaking date off nuclear energy demand projections. Year to date, 160%. The thing about Oklo is I think if SoftBank is closing in on that deal with OpenAI, then that's probably why it's pumping, because if OpenAI is about to get $40 billion, I'd imagine they're going to spend some of that $40 billion into a company like Oklo for nuclear energy demand. That's the sort of dots I'm putting together on in terms of why this is pumping. But if you've been in this, congrats. 160%. I mean, that's just, for a company with no earnings, that is pretty wild. But that's why I think it's pumping. Palantir 113. We are holding it. We are holding 113. Let me see again. 116 resistance or 114 resistance is still 80,000 shares. So a little bit of a work to do to get above it. 135,000 now. 135,000 shares for 114. Let's see if we can get there later today. Marathon's up 4%. Riot's up 5%. Google's down. Amazon is down 2%. Let me check my Amazon covered calls. Those are up 73%. Okay. I think I'm going to close these. So I sold a 255 call on Amazon against a long 190 call. And I sold two of them. I got an average credit of $2.54, aka $254. The stock went down 3%. They expire on 2/28, but now the idea of Amazon getting to 255 by 2/28 is significantly lower. And therefore, the covered calls are up 75%. So I'm going to buy to close. I'm going to buy back 2 of these contracts. And I will release the long calls from collateral, and I will pocket the difference. There you go. So closed out the covered call on Amazon. Again, 255, there wasn't any scientific number I picked for that strike. I was just like, I don't know, the stock's at 230, 255 would be a hell of a move. I mean, that would be moving the stock basically $200 billion in valuation. So I don't know if the company had enough to justify that, but still, I think this is a stupid dip, and I'll probably be buying more Amazon. And it's not even a dip; it's down 2%. It's just the metrics weren't as good, but it's not like there's any thesis breaker on Amazon. CrowdStrike 430, Rocket Lab 2940, Oklo up now 22%. Wow, Palantir hit 113.4. I can't say it doesn't want 114. I can't say it doesn't want it. SMCI up 8%. That's going to be a fun earnings next week. That's going to be a fun one. That's what, February Oh, actually, I'm sorry, guys. I'm not going to be there for that earnings. Yeah, February 11th. I'm not going to be there. It's February 11th, right? On the market close. I will not be there. So you guys are going to have to, we need to get Steve to do a stream. Or Matt, you need to do a stream for SMCI on February 11th. Everyone needs to be on a stream so that they can either blame you or praise you if SMCI goes up on earnings or not. SMCI right here up 8.5%. Dude, as long as they're not an accounting fraud, this thing should gap up to 40 minimum, in my opinion, because obviously the valuation is significantly undervalued compared to the growth they're going to put up. And if you believe in NVIDIA's growth, you probably believe in SMCI's growth, but still, they just have to prove they can file their form. Could you imagine if they don't file their earnings on time, bro? Like, it would be so bad on February 11th if they're like an hour late. Zucks can get away with it, but SMCI can't. Chris and I said we do one. Okay, perfect. So Matt and Chris will be streaming. Chris will be streaming on the 11th for SMCI, and that'll be an important one to see how that plays out. Hershey's is up 1%. MicroStrategy's up 4%. Bitcoin, are we back above 100? Bitcoin, we are back above 100. There you go. And then Robinhood right here is at 55. Nice on Bitcoin. Just chilling right here at 100. Rocket Lab's up 5.8%. Affirm's up 18%. SoFi's up 2.6. Meta, new all-time highs again at 724. Look at that chart on Meta, dude. Just not slowing down. And then Hood at 55. I've got a bunch of puts for Hood at 50. So those are doing well. And then obviously about 100 shares yesterday of Hood as well at 53. I think the momentum is strong. On Saturday, we're going to have our earnings preview at probably 12 p.m. on my channel. So me, Tanner, and Roy will discuss all of our numbers. But yeah, momentum is strong. Let me check resistance for 56 really quick on Hood. 56 resistance is 10,000 shares. 10,000. So not that crazy. Bitcoin right here, 100,000.1 here right now. Yeah, HIMS is going wild as well. HIMS and Oklo today, the winners. I mean, HIMS, 10%. I think HIMS is the short squeeze. I think they've got a 30% short float. So I think that's what's happening with HIMS. You're getting a squeeze. You're getting a good squeeze. I mean, if you believe in the HIMS thesis, you are getting the benefit of the shorts getting squeezed the hell out. And you kind of just get to sit back and watch it happen. Palantir, she wants 114, baby. She wants 114, 113.68. It looks like she wants it. 114, and it's like real strength too. It's not like fake strength. 90,000 shares on 114, 92,000. 20 cents away. 20 cents away. Nike got downgraded today, guys. For those that are wondering, Nike got downgraded by Citibank from like 110 to 70, and that's why Nike's probably taking a hit. Where's Big Bear? BBAI is Palantir is close. Big Bear AI is up 12%, 759. So Big Bear is also getting some momentum right here. 20 cents on 114. Resistance on Hood is 10,000 shares for 56. 10,000 shares for 56. Take-Two's up 13%. Yeah, they had great guidance. Grand Theft Auto obviously is going to be massive when it comes out for them. So that's also helping the stock for those that are into the video game world. Matt said Amit told me I was his Big Bear. Yes, I did. I definitely did. Uber's going up. Uber. Where's Tesla? Hold on. Where's Tessie? Tesla. Wow. 378. Look at that. Look at that. Looks like the 367 buy yesterday wasn't a horrible buy. I expected it to be a kind of a crappy buy. Back to 378 on Tessie. Huh. Hit 380 today as well. Up 1.2%. All right. Robinhood, 55.26. Palantir, 30 cents away. It looks like it wants it, dude. And then Grab, I don't know why Grab's up 2%. It's just up 2%. GoTo came out and they said the rumors aren't true about the acquisition. I'm calling BS, bro. I don't think those rumors get leaked if there's not a acquisition. Again, why would GoTo want an acquisition rumor if it's pegged at a certain stock price? Because then the public markets are not going to give them any premium above that stock price, no matter how well they execute, because they're all going to think, oh, you're going to get acquired. So why would we pay more than the price you're going to get acquired for? So they probably don't want that rumor out there in the world. And that's why they denied it. Grab has not denied anything. Grab has not said anything. So to me, I think those conversations are more serious than not, and I think the street might be thinking that as well. But, you know, I guess we'll find out over the coming months if there is an acquisition. Also, dude, GoTo's down 77% year over year. Like, employees are paid in stock. Like you just can't be, you can't have your stock be that bad from IPO and expect employee morale to be strong. So they got to do something. And if you say, oh, well, they want to be a great company, it's like, okay, but they're going to have to compete with Grab and their margins are going to get crushed. So, which is what's been happening for 3 years. That's why the stock's in the gutter. So I think there's only one way out of this, and inevitably it's through acquisition. That would be big for Grab, but it might take time to see that materialize. Affirm's up 18%, Marathon's up 3%, Riot's up 5%, CleanSpark's up 13%, Nubank 1396, Nvidia back to 130, baby. Nvidia's holding it up. Nvidia is holding it up. I am officially up 2,500 on my Nvidia position. Again, 500 shares, average at 125. And looks like CapEx is not slowing down anytime soon for Nvidia. Robinhood 55.25, SMCI 36, Uber 72. Uber actually finally getting back into the 70s. It was stuck in the 60s for the better part of a month and a half. And then Palantir right here, 113.5. I'm up 150% on HIMS. Do I sell? Hey, you know, it comes to the same question like Palantir, right? Like, you know, if you're up a lot, like, do you believe in it? If you believe in the long-term trajectory of HIMS, I guess you don't. You let your winners ride. But if you think HIMS is just whatever and you want to take the profit, then you take the profit. And like a lot of times these questions are really simple. Like it comes down to, do you just believe in the future? I mean, there was a lot of people yesterday that I saw were posting that they sold at 70 or 80 or 60. And it's like, they feel bad, but they also don't feel bad because at that price, they thought it was a great price to sell. And it sucks when it goes higher, but you know, no one can tell in hindsight. I mean, even Buffett has to deal with, you know, Buffett sold a ton of Apple, I think at like 180, then Apple pumped to, where's Apple right now? 230. I think he sold almost half or 30 or 17% of the, it was a good chunk, either 20 to 30% of the position at like 180, and Apple's at 233, right? Now I wonder if Buffett sold off the rest of his Apple when we get his 13G coming soon. Buffett still has $325 billion in cash that he's holding on to. Most people think he's waiting for a really big opportunity like a crash, but I mean, with the earnings data we're getting and inflation data we're getting, I don't know if we're going to have that crazy opportunity for him to deploy it. Amit, would Hood be a good buy here at 55? I mean, dude, I bought yesterday at 52, so like, or 53. So like, is there that big of a difference between 55 and 53? Not really, right? It's like $2. You can't lose sleep overnight over $2. So yeah, I believe the stock goes materially higher towards the end of the year. And I think they have the growth to justify it. And the fact that Vlad's doing an earnings call in video also means that, A, the earnings are going to be good, but B, he's setting up the company for a very, very strong 2025. So I wouldn't stress over a couple of dollars. Like if you think this is a $100 stock, then yes, 55 is a good buy. But you got to be ready to DCA in case, you know, there's a breather, which you got to expect a breather because the stock is up a lot. It's just momentum is on its side. Momentum is really on its side, and they have the growth to justify it. Meta right here, 723. ELF, 23%. Got a little recovery on ELF. It was down 27 at the lows. Now it's down 23. Let me know if anyone's buying the dip on this one. 67.79 on ELF here right now. So this one's getting a little hit. Rocket Lab as well, up 6%. Rocket Lab getting some love. And then again, Oklo continuing to pump 23% on the day. Tesla as well is green. Apple is red. The rest of the Mag 7s are red. Amazon, Google, red. Nvidia's up. Tesla's up. Microsoft's up. Meta's up. And Apple is red on the day. If there's no valuation at which you would even trim, why do you look at valuation at all in making your investment decisions? Yeah, it's a good point. I mean, wait, we got 114? Speaking of valuation. Oh my goodness. What is happening? It's happening. I don't know what it is, but it is happening. 114, ladies and gentlemen, on Palantir. In terms of that valuation question, I do think there are some stocks where you look at valuation and you say, all right, it's getting expensive, I trim. With Palantir, I mean, you guys know me, I'm a bit emotionally attached to it, so there's not really a valuation that makes me want to sell. And quite frankly, to take out the emotions, objectively, the earnings were freaking phenomenal. And so, like, forget the valuation. If the earnings were amazing, why would I want to get rid of the position, given I think that trajectory of growth is only going to continue, even if it is being priced in? because if we have a drawdown, then I just take more advantage of that opportunity and add to my shares, given I think the earnings will produce further growth in the future. So, but there are some stocks where like, yeah, valuation gets dumb and maybe you get out of it if you're not emotionally attached to it. Like Reddit, I mean, like valuation's kind of stupid there. Granted, I think momentum can take it higher. That's why I like staying in the name. But if you bought in at like $80 and you think the valuation is dumb and it's going to have a dramatic decline, then you sell. If not, then you keep it. I think the valuation discussion comes down to, do you think the valuation is so egregious that the stock will take such a material downturn that you will feel bad about not selling at that level that you thought the valuation was egregious? And if the answer is yes, then you sell. If the answer is no, then you hold on and you don't have to worry too much about it. 114 on Palantir, folks. So we broke through that wall. That wall was 140,000 shares. There is no more wall at 114. I think we'll get back there. We just fell below 114 at 113.27. Now the wall is at 114.50. It has about 90,000 shares, but 114, we could get there pretty easily. Volume is 27 million, and we have hit a new all-time high. We have hit a new all-time high. I don't know what to say, bro. It's as my uncle says in the chat, we are doing it. We're doing it. Dude, that part from the call where Karp said we're doing it, it was such a good part. It was such a good part. He was right. We're doing it. Right? Like they are doing it, and they are doing it at a pretty aggressive level. Here's another thing Palantir launched yesterday. I saw this on LinkedIn, and Chad just posted about this. I mean, this was also pretty amazing. This is why Palantir gets the premium. Palantir thrives when there's a crisis or as so many things are out of our control, whether it's tariff strikes or global supply chain issues. Ani and I discussed why Palantir helps companies in a unique way during these events and how that also translates to driving efficiency day to day. And then he had an interview right here that he posted. The point is Palantir is now helping customers navigate tariffs as per some of the blog posts that I've seen, because they realize that tariffs can be a concern, just like COVID was a concern, and that there's supply chains that get flipped overnight if you have tariffs. And Palantir is telling their clients, hey, we are ready to work with you to navigate the complex challenges of what it means to deal with tariffs across the entire world. So the point is, when there's global things that happen that obviously flip things up economically, there are software products that can help manage that to make sure your business stays afloat. And if tariffs are one of those things that happen, Palantir looks like that's an opportunity for them to capitalize on as well. So again, going back to the theme of transformative software, what is transformative software? It's software that actually helps you when shit hits the fan. And it looks like Palantir continues to do that right now as well. That brought tears to my eyes. We're doing it. It was so good, dude. It was so good when he said that. We got to listen to that again. It was just so good when he said we're doing it. Because it was true. We're doing it, right? Like the question was, what do you have to say to retail investors? And he was like, hey guys, love you. We're doing it. We are doing it. And you guys were right. That's essentially what he said. I mean, he said it in a very intellectual way. But he was just like, you guys were right. You guys believed, and you guys are getting rewarded for your belief. Let me see if I can pull that. Like a minute. It was such a good moment. Such a good moment. I think this is it. Hopefully the audio is not too bad, but we're doing it. We're doing it.
Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
We're doing it. We're doing it.
I have to clip that. That has to be a sound. That's just, it's too good of a sound.
And I'm sure you're enjoying this as much as I am. Let's not talk to analysts about the burden of being right, our burdens of investing in ontology, our burdens of actually looking at the math, the burden of reading what the rule of 40 is, the burden of being honest about what an enterprise software company is, or the burden of explaining to your friends that you're really happy. Maybe we should just stop talking about it. I'm very happy to have you along for the journey, and you are partners for us. Every Palantirian, we are crushing it. Everyone else who's listening, we are dedicating our company. We have dedicated our company to the service of the West and the United States of America, and we're super proud of the role we play, especially in places we can't talk about. And we love our success in the U.S. and globally. Also, we are doing in the United Kingdom and many other places. Palantir is here to disrupt and make the institutions we partner with the very best in the world. And when it's necessary, to scare enemies and on occasion kill them. And we hope you're in favor of that. We hope you're enjoying being a partner. And we're really happy and very, very focused on what we're doing. Thank you for your time.
It was wild, bro. It was wild. It's just, we're doing it. We're doing it. You can just see the pure joy in his face right there. All right, getting a little bit of a dump right here. Hims, I mean, stuff is still pretty green, but we're getting some stocks going red. Amazon's going more red than not, down about 4%. Tesla just turned red. Hims is still up 10%. Hood right below 55, 54.70. Palantir 112.9. Oklo 56.25. That's up 17%. And then Rocket Lab right here up 4.3% here right now. Where's Googs? Googs is also getting hit. Oh, wow. Hold on. 186 on Google. That's actually a dip. That's a dippy dip. Google is definitely down right here. It's definitely down. Wow, that's down from 212 to 186. Why is Google tanking right here? Is that just following big tech and Amazon? Amazon's at 230, but Meta's not tanking. Meta's still up for the day, 719. It's down from 725. Kind of feels like algorithmic, like if it was going to tank at a certain level and it was already at a low level, it's tanking to a further low level. But we got to see if some buyers step in at 186. I would imagine they do. S&P 500 is tanking as well. Oh, I think we got some economic data. Hold on. Yeah, hold on. I think we got some econ data. Let me see. I think we got something here. Let's see. This might be the reason. Let me pull this up. Let's pull this up.
Data crossing the tape. Rick Santelli's got it. Hey, Rick.
Yeah, Carl, watch equities. We were just talking about they were making new highs. They reversed a little bit. Interest rates, they might move up here. Some big surprises in our December final read on inventories, but I'm sorry, on our preliminary Feb read on Michigan. 67.8 is the headline. Way lower than the 71, almost 72 we were looking for. 67.8, that'll be the weakest level going all the way back to November of 23. Now, if we look at current conditions, also significantly lower, 68.7. This follows 74.0, and I understand it's a preliminary. 68.7, that would be the weakest going back to, November of last year. And then finally, if we look at expectations, what lies ahead, 67.3, well below 69.3. And here's where it even gets crazier. 1 year inflation moved from, get this, 3.3% to 4.3%. I'm staring at it and thinking maybe I picked it off wrong off the wires, but 4.3, that would be the highest surveyed inflation on the 1 year front in this report going back to November of 23. And if you look at the 5 to 10 year inflation, it came in roughly as expected, but 1/10 hotter. Instead of 3.2, where we've been spending some time, moved up to 3.3. To find a higher number, you're going all the way back to June of 08 when it was 3.4. We've basically gone from 3.2 to 3.4 with regard to history. Now, very quickly, these final on inventories wholesale remains down 0.5, down 0.5%. And on the trade sales, this is a fresh December number, 1%. 1% is pretty strong. We haven't had a wholesale.
So Michigan consumer data, I think this is a nothing burger. I think this is stupid, bro. Michigan preliminary consumer sentiment, 67.8 versus 71.1. I don't know. Look, I'm looking at all these earnings and the consumer's doing great on these earnings. So I get that they did a survey, and I know Michigan's a respected consumer sentiment survey, and it probably will create a market volatility as we're seeing right now. But does that mean the consumer's struggling? I don't know. You know, it's funny. We've been talking about this whole idea of the consumer struggling for like a year now, and it's never really materialized, right? And I don't want to downplay it, but like, so many times in 2024, I remember where we asked the question. There was a good 3 months where the headline every day was consumer struggling. And we tried to analyze it. And I think for, like a month, maybe people believe that, no, the consumer is really struggling and shit's going to hit the fan. And then that never happened. Like the consumer was fine. No matter how many studies you look at about credit card debt and auto delinquencies and yada, yada, the consumer continued to be fine. So either shit's going to hit the fan eventually and the consumer is not fine and everything's been propped up and everything's fake. Or people have jobs, which we saw today with non-farm payrolls. We got a revision of 256 to 307,000 jobs. And those jobs are enough to keep people afloat. And as a result, they're able to spend. And because they're able to spend, earnings are able to go up. Even if eggs cost like $10 for a dozen of them. But I don't know. I don't believe the consumer is struggling. And there's obviously parts of the consumer that are struggling, but not enough to cause an aggregate decline in the broader economy. I mean, just look at United earnings, Delta earnings, Southwest. They have plenty of people traveling. The cruise lines did great. Like, it's hard to imagine there's that much fear. But the algos will be algos, and we had a little bit of a dip. We're getting a bit of a recovery right here on some of these names. Robin at 54.85, Palantir still at 113.7. I think it goes back to 114 because it hit it for a second, got rejected, broke through that wall. So I think 114 is possible. Grab as well up 1.6%. Oracle 176. Vertiv just went green. VST, Nancy stock just went green. It was red in the morning. Affirm 16%. Marathon up 1%. And then SoFi up 1.74% as well. Yeah, Palantir is 10 cents away from 14. I think we get there. I think we get there from 114. I paid $20 for 60 eggs at Walmart yesterday. Dude, if Trump can get the egg prices to come down, I think people are going to be happy. But currently, eggs are pretty damn expensive here right now. Let's go to the spec names. How are they doing? Spec. We've got pretty much green. All the quantums are green, up about 3 to 4%. Oklo's obviously green. GameStop's green. Archer is up 2%. Big Bear is up 12%. SoundHound's up 1%. And MicroStrategy is up 3.37%. So spec is also going green on a day like this. Also, money market funds, for those that missed it, we added $44 billion to the money market fund, $6.92 trillion on the sidelines. That's another reason why I think it's going to be hard to see some dramatic decline in terms of equity prices via the consumer. There's a lot of money on the sidelines ready to buy that dip. Lots of money on the sideline ready to buy that dip. And people will get excited if we do have some major 10, 20% correction, if we end up getting it. Palantir, are we at 114? We are at 114. There we go. Well, you guys know what's better than 114. You know what's better than 114. It's 115. Resistance at 115 is 96,331 shares. So we got another 96,000. What's the market cap now? Market cap is 260 billion. Okay. Well, there you go. 260 billion. This is wild, bro. I don't even know. I don't know if there's a way to explain it, but it's happening. It is happening. Yeah, we had a 2-minute dip, basically. We had a 2-minute dip. Was it? Do you guys remember 2021? Was it kind of like this? I wasn't following Palantir in 2021. I mean, I know the broader market was being followed. I know GameStop was similar in terms of it just kept going up every day, but GameStop wasn't a real company. Palantir is a real company. That's the difference. Now, that doesn't mean Palantir deserves a crazy valuation just because it's a real company, but it does mean that the valuation is a bit more sustainable if you're investing in something real versus something like garbage, which was GameStop. Sorry to disappoint the GameStop fans, but it's garbage. It's been garbage. It's still garbage today. It's like, it was never real. It was the pure definition of a meme stock, and it was being bought to squeeze out the shorts. Like, there is no shorts on Palantir. It's less than 4% of the float. There's 2 billion shares left. There's no squeeze on the shorts. This is just people buying because they want to be part of the story. Like, there's no crusade that retail has to stick it to 0.72 or whatever the name of the hedge fund was that was shorting this thing. Like, there is no hedge fund shorting this thing. The hedge funds are buying this thing. They love it. I mean, like, they're getting more. So it's just like, I feel like this is different in terms of people are buying it because they want exposure, not people are buying it to send a message to the big guy. Like, there is no big guy here. Retail is the big guy. You know, it's like, it's just a totally different ecosystem. And I do think there is FOMO, but I think the FOMO is institutional FOMO more so than retail FOMO. Chris says the way to explain it is that we're in the beginning of a transformation in society, and Palantir has, through hard work and some luck, placed themselves in the core center of this new world. We all use this. Yeah, it's a hell of an explanation. I agree. If we're in the beginning of a transformation in society and Palantir has ended up in the middle of it, and I think there's a lot of reasons they're in the middle of it. Some of it is luck, but also some of it is 20 years of grinding and caring about your customers, not caring about sucking up as many dollars as you can to try to appease shareholders. Like that, that'll put you in a really nice position when it is prime time. And right now, it is definitely prime time. Oracle up 2, Marathon up 1, SoFi up 2, and then Nubank up 0.33. Let me see if we got any other headlines across the street. Let's pull up some other stuff going on. Again, we talked about the Nike downgrade. We talked about the Amazon upgrades. We talked about preliminary U.S. consumer sentiment from Michigan. SoftBank again, $40 billion at 260. That's what they're thinking for OpenAI. So that is one of the headlines we're seeing right here. We saw Neil Kashkari speak. We saw non-farm payrolls. Here's a stat. Retail traders are pouring into the market at an unprecedented pace. Let me just share this right here. Well, it's kind of conducive with what we were just talking about now about retail investors. Today's going to be another day where no one works from home. Everyone just stares at Palantir. It's going to be another day of no productivity for the people working from home. NVIDIA just went red. Okay, NVIDIA just went red. Yeah, S&P is probably getting hit off that Michigan survey. Retail traders are pouring into the markets at an unprecedented pace, with their activity now surpassing even the meme stock frenzy of January 2021. Wow. Retail inflows hit $2 billion twice last week, a rare level achieved only 9 times in the past 3 years, 5 of those occurring after Trump's inauguration. So 2 times last year, there were days where retail dumped $2 billion into the stock market. First of all, that's very bullish for Robinhood, but that means retail is definitely trading. Tuesday saw a record $3.2 billion net imbalance, the highest ever, with 70% of inflows targeting the Mag 7. Wow. Looked like retail's really buying up the Mag 7. NVIDIA led with $1.3 billion in net purchases, while Tesla saw strong demand at $632 million. This is from JP Morgan. Great for Hood, and obviously great for the Mag 7 in terms of having a bid to buy that dip. Palantir right here getting rejected at 114, now at 111.87. But you got people buying the dip on NVIDIA and Tesla, it looks like, at least when it comes to retail. NVIDIA right here, 128, and Tesla is 371. By the way, for the second month in a row, Palantir is the top 10, is in the top 10 of the Robinhood assets on the platform. So the top 10 stocks on Robinhood, January, Palantir was in the top 10, and for February, Palantir is also in the top 10. The other 9 names, which 2 of them are the ones that surprised me the most, is Ford and GameStop. So Ford, GameStop, Tesla, Amazon, Meta, Palantir, Disney, Apple, Microsoft, NVIDIA. Ford and GameStop are the ones that I don't understand. Disney as well. I don't know how retail owns this much Disney or Ford. I mean, Ford, I get it. Maybe it's because of the dividend, but GameStop, I also get it. I'm not happy that it's the top 10 holding, but it is what it is. Disney, I don't understand. Palantir made its way last month, and it is staying there in the month of February. And it's probably going to get a bigger weighting now that it's up like 30% this year. I think the other reason for Ford is if you signed up on Hood back in 2019, they gave you a free share of stock, and I think Ford was the stock they gave to everybody. So people just probably have that free share left. But that was from 5 years ago. Like, the idea that that's taking up that much weight on the platform is kind of insane to me. I can't even make sense of it. SMCI right here up 4%. Bitcoin going a little bit below 99 and 98.2. But nonetheless, Ford is a top 10 holding. S&P now down 1/3% on the day. Jay Roberts, thank you for the $10 super chat. Amit, want to say thank you for never saying to see my buys and sells in real time, join my private group, or join my course to learn, etc. Really respect that about you. Jay, appreciate you, man. Thank you for being here. I can never do that. Just feels, I don't know, just feels weird. And I don't think there's really any value in charging for that type of a service. So thank you for being here every day. And thank you for enjoying the show. I just enjoy that this community comes together every single morning. Like, that to me is the coolest thing in the world. Like, that is, I just want to keep growing that. And it's fun, dude. Every single day. It's fun. I mean, this week's been very fun. Not every week's going to be like this. Not every year is going to be like this. I mean, we haven't had a bear market in like 3 years. So it's wild, but it's been fun. I'm happy people are enjoying it. And, we're doing the one thing that most people don't do, which is actually put your money into compounding assets and trying to get some financial freedom. So it's exciting to do this with everyone here. OpenAI update from CNBC. Let's see what they're saying about SoftBank and OpenAI.
A massive investment in OpenAI, some $40 billion of equity that will be going from SoftBank over the next 12 to 24 months. So it's not all in one check to OpenAI. Pre-money valuation, $260 billion for OpenAI. Post taking in the money, $300 billion is what this latest round of fundraising will mean for OpenAI's valuation. Of course, OpenAI, the parent company of ChatGPT. It is still in process that could take quite some time. It's got a level of complexity to it, fairly high one, of moving from a not-for-profit to a for-profit. And obviously, it's also involved in litigation with the likes of Elon Musk about some of that as well. That is not deterring Masa-san, the man who runs SoftBank, from making this a very important investment for his firm, in the belief, obviously, that there was a great deal of profitability yet to come for this company, and doing so at that $260 billion valuation he's willing to come in for. I'm told the expectation is when all is said and done, and when you finally get a cap table on this thing at some point down the road, they're going to own as much as 15%, that being SoftBank, of OpenAI. That would put them at a higher equity ownership, I believe, than Microsoft, of course, which has been its partner. But as we've reported and others have as well, that partnership, while still in place, is not exclusive, certainly. Microsoft and OpenAI making that clear with the latest effort called Stargate in terms of building data centers all over the country and spending as much as $500 billion over a number of years.
I just put a poll in the chat. Why do you think OpenAI is dumping $40 billion into, or SoftBank's dumping $40 billion into OpenAI? Curious what people think. Either they're being dumb, OpenAI is going to get to AGI first, or something we don't know that Masa knows that is going to surprise everyone when OpenAI eventually unveils it.
Years to do so in partnership with SoftBank and Oracle, and as well some foreign investors, MGX being a key one there also. SoftBank can syndicate, I'm told, as much as $10 billion of the ultimate $40 billion in commitments it has made. So could bring its overall number down to $30 billion. It would obviously need OpenAI to approve, whoever those investors were. And we're going to go back to sort of some of the questions here. So where all the money going to come from for SoftBank? The commitment to Stargate and the commitment here, well, it adds up to a very large number. They do have $140 billion in liquid securities, obviously significant position, 90% of ownership of ARM. Significant ownership is still of T-Mobile, though not anywhere near that percentage number. And a balance sheet, I'm told, as well, that does have some leverage capacity. So we'll have to wait and see for more details on that, guys. But and sort of this thesis that says, well, there's going to be more competition and many of these large language models are being commoditized. Obviously, Masa does not see it that way.
No, I mean, he's been all in,
All in.
from his now two appearances with President Trump.
Right.
First at Mar-a-Lago when he announced, $100 billion investment. And this will be part of it, right? $40 billion.
I think you could count that towards it. Yes, I think
Last
you do.
time around, a lot
Yes.
of his commitments were expressed in the form of investment.
Correct. And that's what we'd expect here as well. It's not like it's just de novo here. This is new money. This is for existing commitments and things of that nature.
And also, alongside Sam Altman when it comes to the Stargate investment. So,
Yes.
So I'm blaming CNN for that freeze, dude. Someone said to look at the fear and greed index. So I typed in CNN fear and greed index. As soon as I clicked on the website, the whole thing freezes. Everything freezes. I'm blaming CNN for that one. As soon as I know, I saw that I was frozen. I saw it and I was trying to figure out what happened. As soon as I clicked on the website to check the fear, and now I'm not going to that website. Now I'm going on my other computer. I'm not doing that. Freaking CNN, bro. There's something. It was that way. I clicked on CNN, fear and greed, and then boom, it freezes up. I don't know what CNN's doing here, bro. I know I was frozen. I saw that I was frozen. My whole screen like paused, and I'm blaming CNN. Anyway, it's at neutral. Yes, it's at neutral. 46 over 100. 46 over 100. So we're not in super fear, but we're not at super greed either when it comes to it. Mr. Green, thank you for the $10 super chat. Yo, Amit, please feel free to share the screenshot of my position in trade. I'd love to hear input on what you guys would do. Let me show that actually. So thank you for the super chat. He just sent this on Discord yesterday. So let me pull this up. Okay, so here's a position from someone in the chat. What would you guys do in this position? So this person has 1,096 shares at an average of 13 on Palantir. He's up 760%, 108 grand, but he has 10 calls at $90 expiring today. What would you guys do? So he has 1,000 shares. He's up very nicely. YOLO, Palantir, 100% all in. But today he has some calls at 90. I would roll that call from 90, probably out a couple months to like 130, 140. Even if you have to pay a small debit, which I don't think you're gonna have to pay a small debit, but I would, that's what I would do. So you guys can say what you would say in the chat. I would not let the shares get called away unless unless you're fine selling it at 90. I would imagine if you've been all in for so long, you probably don't want to let them get called away. But that's what I would do. I would just roll up and get them out. Up and out 45 days to 110. Yeah, that's reasonable. If you want to go up another 60 days to 125, give yourself a little bit more safety, then that's fine as well. But again, it depends on, do you want to keep the shares or not? Bsoft says, roll to an aggressive strike, keep the premium and let shares go away a little higher than they would have today. Well, yeah, so if you're ready to sell them at 100, instead of 90, you could roll to an aggressive strike, and then if Palantir tanks, you get to keep the shares. If not, if you're ready to sell them at 100, then you can sell them at 100. But it really just depends on where you want it to go. Yeah, I mean, look, if you've held since $13, again, it's just a question of like, is it worth letting go at this point? Palantir right back to 113, 113.2, or is it worth taking some profits here? And if you want to sell 1,000 shares, then or do you want to sell 100 shares, then roll 9 of them, let one of them get called away. Like, I think there's a lot of creative ways to do it, but if you want to keep them, I think roll it out 130, a couple months, and I don't know if Palantir gets to 130 in a couple months, maybe it does, but if it doesn't, then you should be good to keep the shares. You need to do a stream on rolling. We will. So with Jason, we're definitely going to do a stream on option rolling. Might be in 301 instead of 201. 201, I just want to focus on the Greeks. So I want to make it super simple. I don't want to get complicated, but we'll focus on the Greeks in options 201. Theta, Vega, Gamma, Delta, all that stuff that determines like the pricing of options. And then after that, we'll focus on like actual spreads and rolling and strategies like that. Okay, so 47% of you said SoftBank's investing in OpenAI for something else that we don't know. I agree. I think they might be working on robotics. And if they're working on robotics, then they probably need a lot more money. The fact that Figure is cutting off his ties with OpenAI also tells me that they might be competitors. And if they're competitors at this point, then we are going to see OpenAI need to have a lot of money to be able to build out all these robots. Especially, they might be competing against Tesla too. I mean, if they're working on robots. So Grab's up 2.5%. I don't know why. I don't see a headline. Is the dollar even down today? The dollar is up today. So I have no clue. No clue why Grab's getting a bid today. But it is getting a bit of a bid. Him's up 13%. Incredible, dude. Absolutely incredible. Wow. This thing is now up 80% year to date. Just amazing. Just amazing on Hims. Amit, can you explain why a stock can go up but the leap's price can be misvalued, especially on spreads? So when you're early, like my Grab spreads are not up today, even though Grab's up 2%, because there's a lot of extrinsic value on the contract, right? There's 2 years till January 2027. So these spreads are typically mispriced 2 years before they expire because it's 2 years before. Like the most pristine and precise way to price options is as the option is, or the closer the option is to expiration, the better the price is going to be, because you have an exact understanding of what's going to happen to the stock because you're closer to expiration. So if I'm buying a call for Amazon for $240 for today and Amazon's at 230, that option is going to be worth very little because it's very unlikely that Amazon goes from 230 to 250 or 240 today, especially after those earnings, which is why a lot of call buyers lose, because they buy a call and then the stock tanks and then they lose all their premium. But Amazon to 240 2 years from now is very likely. And so the option A is going to cost more money, but it's not going to be as precise as the price of what it would cost today. With Grab, which is a rather unliquid stock, it's not like Nvidia or Palantir. There's not tons and tons of people trading it. And you have a stock that's, barely moving. It's not like Grab's moving up 3 or 4% every day. You've got 2 years out until expiration. Those spreads are going to be completely mispriced, but that is where the opportunity is. That's where the asymmetry is. That's how I got the Robinhood spread cheap. Like when Robinhood was $8 and I thought it would go to 20, the market makers definitely didn't think that. And so, they didn't really know how to price those spreads. And as a result, because I took more of a risk, because 8 to 20 is a hell of a move, I ended up being right on that, but it was more risky. I got a very cheap discount on the spreads because it was such a large risk and it was so far out. Palantir back to 114 for the fourth time today. So that's why when, stocks move in a certain direction, the spread pricing might not move, or the underlying call or put option might not move in the same way. But the closer you are to expiration, the more likely the option price will move in accordance to the stock price. But if you're 2 years out, like you are on Grab, then yeah, it takes time. It takes a lot of time for it to move. Yeah, those covered calls are not getting help today. 114. Those covered calls are not being, anyone who has covered calls expiring today, you might just have to pay the piper and roll. I don't know. In 3 hours, could Palantir get back to 110 and you pay a little cheaper of a price? Maybe, but if it doesn't, then here we are. Robinhood 55.15. We hit 55.30 here today. Currently 55.15. BBAI, Big Bear, continuing to pump. 8.15. Wow. 20%, dude. This thing is up 70% this year. It is not taking a break at all. Not taking a break at all. Is anyone buying Palantir? Is anyone buying Palantir at 115, 114? Do I have to be the guy to buy it? Are you guys going to make me be the guy who bids? This is crazy. This is crazy. This is wild. This is so wild. Josh said I'm buying puts. Oh my gosh. Oh my gosh. This is wild, bro. It's just so wild. So freaking wild. Market cap, 258 billion. But it is what it is. Nvidia going green as well, 129.112. Nvidia going green, Meta 715. Big Bear at $8. Let's see. Let me call Steve. Let's see if he picks up. Steve has a new article on Google today, so probably get some updates on Google. Let's see if he's free. Yeah, 100 looks attractive on Palantir. It is wild. It's wild. Steve, good morning. How are you?
Doing all right. How are you?
I'm good. You are live on the Market Open.
I'm not even going to say it.
Good, because I just realized as soon as I said it that you would say your counter to it. But yeah, SMCI having a good day, right?
Yeah, I mean, when Amazon comes out and says they're going to spend $104 billion on CapEx, I mean, it's you got to think it's going to be a good day for a lot of companies today.
What did you think about Jassie's earnings on Amazon?
They're incredible.
Why?
Why? Why were they incredible? I don't know. We can go through them and figure out why they were incredible. It's, this could become the most profitable company in the market in 2 years. I mean, when you look at what they produced in Q4 is absolutely incredible. I mean, 188 billion of revenue, big increase. And you look at the net income, they cracked 20 billion for the first time ever in the quarter.
It's pretty incredible. I mean, Google did 25 billion, so the fact that they're up there is just wild.
And Amazon's never really focused on profits. And then you look at cash from operations, almost 46 billion in cash from operations this quarter. I mean, they are going to keep spending on CapEx and data centers. There's so much growth on the horizon for them. And none of these companies are taking their foot off the pedal. And I think that we haven't even begun to see how AI is going to be utilized in enterprise stacks. And Amazon and Microsoft and Alphabet are clearly going to be the winners.
Do you think the street selling this off right now is because they're spending too much on CapEx and that's like a silly reason?
They're dumb. Okay. I mean, once again, it goes back to these fictitious numbers that I have a problem with. You know, oh my God, we're worried that Amazon's only guiding for 151 to 155 billion in Q1. Get out of here. I'm so sick and tired of people being like, oh, they're guiding too low. Amazon knows their business better than these analysts. They're telling you what they're going to do. Just be okay with it. I mean, why is guiding for 151 billion on the low end in Q1 bad? They're guiding to do over 50 billion in revenue per month. It's just, it's crazy.
Okay, so let's talk about Googs then. I'm putting your article in the chat so everyone who wants to read it, you guys can read this article right here.
Oh, that's so nice of you. Thank you. And I will respond to everybody who puts a comment on.
Google's down another 3% today. Why is the street getting this wrong?
Once again, they're dumb. I'm not going to be nice about it. You know, these are the best companies in the market. They are getting fixated on crazy things. They're getting fixated on, oh, they're not hitting my silly number. They're guiding for something that I'm not agreeing with. Or they're not okay with Alphabet generating 1.9 billion in net income per week. Not per month, per week. They generated over 100 billion in net income. They're now the most profitable company in the market.
Oh, they're more profitable than Apple now.
Yeah, they just became more profitable than Apple by like $3 billion.
Wow.
And they're doing 125 billion in cash from operations or something like that. The street is completely getting this wrong. You look at the valuation metrics that I put in there. They're trading at like 19 times 2025 earnings or something like that. They're trading, I think, 16 times 2027. You're the only company in the Mag 7 trading under 20 times earnings for 2025, I believe.
Why is Google getting discounted compared to the other guys, in your opinion?
I don't know. It's not like they don't have another 30% of growth after this year over the next 2 years in EPS. And that's without including all the buybacks. I mean, you look at that chart I made with what they deploy to CapEx, how much cash from operations they pump out, and then what they do with that from the free cash flow, how much in buybacks they buy. I mean, this is a company that's done over 300 billion in buybacks over the past decade. Like, this is a company that is firing on all cylinders, should be over 3 trillion market cap, and it isn't. It is absolutely insane, and their margins are incredible. And oh no, they didn't get 31% or 32% year-over-year growth, and it's slowing compared to what the Q3 comps were. I'm sorry, 30% year-over-year growth or 30.4% year-over-year growth in cloud. If you're telling me that's not good, you don't understand business and you don't understand Alphabet. Like, I don't know what to tell people, but I hope it keeps going down so I can just buy more at a better price.
So in terms of 2026 forward PEs, Tesla's at 96, Amazon's at 31, Apple's at 28, Microsoft's at 27, Meta's at 24, that's cheap, Nvidia at 22, that's cheap, and Google's at 18, that's the cheapest.
Yeah, it's pretty crazy where we're at right now.
That's pretty incredible that Google's cheaper. I mean, it's also pretty incredible that Nvidia got that cheap as well. But
no, Alphabet's at 16.21 times 2027 earnings. Oh, you said 2026. I'm sorry.
Yeah.
Okay. Yeah, 18.6. Yeah. Then you look at 2027. I mean, there's a lot of growth on the horizon. It's absolutely incredible.
All right.
And you look at the charts that I made about their businesses. Every business that really matters is up and to the right. You look at YouTube ads, you look at subscriptions, you look at search, you look at cloud. And this is a company that's firing all cylinders, and it's crazy that they are getting crushed. It's just crazy. Yet people want to keep buying Palantir and push it to 115.
Well, I was just going to ask about that. So we're at 114.70.
Yeah.
How are you processing what's happening right now? In fact, I might have to ring the bell on the phone with you when we get to 115, just letting you know. But
I mean, this is an overreaction. It is stupid. And the fact that Amazon and Alphabet are selling off after incredible earnings and people want to keep buying Palantir instead of these companies is absolutely insane. And where were all these people last year? Where were all these people with AIP? This is nothing more than people are chasing momentum now, and they don't care about numbers. They don't care about anything except the stock is going up, so we're going to invest. That's all this is. That's all this is. I'm not saying they're wrong because they're trying to make money, and I get that. But this is straight chasing and gambling. That's all this is. And this can keep getting stupider, and this can keep going up, and it can keep getting more overvalued. But there is something seriously wrong when Alphabet and Amazon report and they go down on incredible numbers, yet Palantir, it keeps going up, and they're not even doing $3 billion in revenue. Like, come on. Like, what are we doing at this point? Like, this has become a casino.
You said this last night on the show, and I think this is a good point you made, that if the casino is filled with institutions and not retail, then this could get even crazier.
Yeah, it could go to 200.
It could.
It absolutely could. But at 200, it becomes a 400 billion company. And now you're telling me that a company that doesn't even generate $3 billion at 400 billion market cap, that's bigger than Adobe and Workday and Salesforce is realistic? I mean, come on. At some point, this is a casino, and it's not going to end well. And it can keep getting crazier for a while, but this is not going to end well. I'm happy for everybody that's making money, but people who are investing here, I would love to know why they're investing, because there is no reason to invest right here. And I'm not some bear that's been bearish since $10. And I was one of the first original bulls of Palantir. So when I say that this is a casino, it is much different than a regular bear saying that it's a casino, because I'm not a long-term bear. I think that this company is going to be incredible down the road. But it's gone to companies that are incredible go through pullbacks. This hasn't pulled back, and this hasn't pulled back. Like, this doesn't normally happen.
What do you think the pullback price is if it does happen?
It's going to be hard for this to get under 70, 75 at this point.
Which isn't even, I mean, that's a pullback from these prices, but it's not really a pullback in terms of, Palantir's still up 400% from last year.
Think about it. 6 months is 2 quarters, okay? In 6 months, this is up 335%. What have they added in 6 months? You know what I mean? Like, oh, cool. They went from 2.23 billion in revenue to 2.87 billion. Oh, cool. Cool. Added 500 million in revenue and stocks up this much. Like, get out of here.
We are 3 cents out. There you go, Steve. I'm glad you're with me for this occasion, because you're going to have to hear a bell, because we just hit 115 on Palantir.
I mean, seriously, you don't think that this is absolutely insane?
Oh, of course.
They're not even doing $3 billion in revenue. I mean, that's the problem. And I get it. You can't find AI in the spreadsheet, blah, blah, blah. And I love Ox. He's been right about more things than most analysts. Okay, very smart guy. But at the same time, things can get overvalued. Great companies can get overvalued. And this is insanity. This is a casino, and this is gambling.
I do think there's an argument that Palantir actually cared about their customers and built software that mattered. And in a world in which that is very rare to find, because all you have is steak dinners and PowerPoints and bullshit, the street is rewarding Palantir for being
No. That is fine. but the numbers are the numbers, and that has not translated into a company that generates enough.
No, but I'm not talking about
generate.
numbers. I'm not talking about numbers. I can't argue with you on the numbers. The number, you're right. I'm not going to argue on the numbers. I'm not going to do that. No one's arguing with you on the number. No one in the chat is arguing with you about the numbers. It's about the other reasons why people are excited to own this name.
Listen, as an American, I'm super excited, and I want Andrew to go public because the second Andrew goes public, I will buy Andrew and never sell a portion of it because I always want to own it. Like, I've always said that. But once again, from a net income basis, this company didn't even do $500 million of profit in 2024.
Yeah, I get,
like, really think about that.
I get every time you bring up Steve, that 80, 60, 70, 90, 100, or 115 don't make sense on that same statement you said. So at this point, what's the difference, right, between 60 and 150? There really is no difference.
Yeah, no, listen, I get it.
Which is why I'm saying it's not about the numbers. It's just not.
I am worried that people are going to get seriously hurt on this because there's no way. This can keep going up. Maybe it hits 150 in 2 weeks, okay? But there's no way it can continue to do this indefinitely.
Steve, I'm telling you, retails. First of all, I asked my chat a couple minutes ago before you called, who's buying? Pretty much everyone said, no, I'm not buying. Right? Like no one in the chat is buying aggressively. And then if you look at Robinhood, if you look at their metrics on Palantir, when you scroll down to the bottom of the app, I'm looking at it right now. Retail has sold literally. I'm just going to show the screen to the chat real quick. It has been 11 days. Look at all that red. Look at all that red. 12 days of pure selling from retail. You're saying you're worried about people getting hurt. I think you should worry about the hedge funds that might get hurt because I don't think it's going to be.
I don't care about hedge funds getting hurt.
Well, it's not retail. I don't know if retail's buying it up as much as we think it is.
And you know what it could be because the market cap's going up. It's becoming a bigger percentage of the S&P and total market funds. It could be ETFs that have to buy right now.
That's also
true. Which is actually
Yeah.
not good for retail.
I mean, that's a fair point. That's a fair point as well.
That's not good for any of us that have S&P funds for retirement by any means. And that's another problem. I mean, this is becoming it's definitely top 100 companies now in S&P.
Top 40.
Top 40 now. So more money comes in every 2 weeks. More money's buying Palantir. And at some point, this is going to crack. It's just no company has ever gone up in a straight line and stayed on that trajectory.
See, the thing is, again, I think everyone knows that and everyone's ready for a drop because we all know it's extended. However, I just think it's so funny that, like, if this isn't retail, that's my caveat. If this isn't retail, this is the smartest money in the world that decided they have to come in at 10x the price we bought it at. 20x.
This is a better investment than GameStop for retail because this is actually a real company that did real things and this is not a meme stock, okay? This was a real thing that retail got right, that other people discounted because they couldn't get through the black box narrative. And you have retail dissecting it and explaining this away. And there were really nobody working for any big firms that were getting on board except for Ives.
Yeah.
So, I mean, I'm happy for everybody. I'm just, this worries me because it makes me feel like the stock market is becoming more of a casino than investing. And that worries me because it's not really just about Palantir. It's about the premise around if people are willing to blindly go into this just because of momentum, what other investments are they making? And what type of due diligence are they doing? Because this is erratic behavior.
Well, we're doing it.
Right.
We're doing it. It's happening, dude. It's been a crazy week, bro. I can't even explain it. This has been, I mean, I get it because obviously you have a perspective that's valid. Other people have perspective that's valid. Then you got, dude, people are sending me screenshots of them up $500,000. They got a wife and kids. You know, like when you see that shit, you're just like,
yeah, it's life-changing money. I get it. And I'm happy about it. It's just when you put it into perspective and take a step back and really look at what that means, does that mean that people are going to be making more risky investments in the future? And does that mean people are going into this without doing the due diligence? I mean, there's a lot of things that this could mean, and none of it's good.
Well, I think there are things that are good. I think first of all, this is, I think for me, and I think a lot of people in the community, this is our biggest win, right? Our first big, this is definitely my first big
This is
win.
going to be the biggest win for a lot of people for a long time.
So that's my point. It's like, if it teaches you how to become a better investor, how to listen to an earnings call, how to, the real take, it teaches you how to hold companies to such a high standard when you've been spoiled as a Palantir shareholder. Now I want some of my companies to do a video earnings call. Like, I want them to put on a performance. I want them to actually care about retail. Like, there's so many things we learn, and I think that that raises the bar for investors as well. Because when you've been spoiled by Carp, you expect a leader to be as visionary, and if it's not, then you're just not getting my investment dollars, right? It might just keep going into Carp.
Sure.
I mean, people are holding Sundar to a pretty high standard given that call compared to Carp. And you could say that's fair. That's not fair. Obviously, Palantir and Google are different. But the point is, for the people that got Palantir as their first big win, I think the positive effect, even if the stock takes a dip, is that they are learning how, including myself, how to actually value companies, invest in companies, listen to company earnings calls. And that should help us become better investors in the future to hopefully find
the one thing I will say that is good coming out of this is it's getting more people to pay attention to earnings calls and dissect them, which I am happy about because that enhances due diligence.
Yeah, it enhances due diligence. And, people can make a joke about the whole video earnings call, but my point is we feel something when we listen to Palantir on the earnings call. And that means something to shareholders, and especially on a retail investor base. Every single freaking company is trying to figure out, how do we get a retail investor base? Except the Mag 7, right? Because they don't really need one, even though Elon, has a good one. And even NVIDIA, dude, they're inviting freaking influencers to their GTC event. Like, everyone cares about new media because people realize that you can't just appeal to the big boys anymore. You have to appeal to independent creators. And as a result, it puts you to a higher standard. And I think it forces you to care. I mean, like Grab, right? Why am I excited about Grab? The number one reason is because it's a founder CEO. And I've seen what happened in successful investments with Karp and Vlad that are founder CEOs. If Grab had some random suit running the company in Singapore, that's not getting my money. But I learned that a founder CEO can take a company to 100 billion because of Vlad and because of Karp. And I think everyone's learning so much from Palantir as their kind of first win in the market. You don't care about any of this. You just care that they're not.
No.
Yeah. Okay. Well, anyway, NVIDIA is at 130. Looks like.
I'll tell you, I think SMCI is going to be 50 next week at some point.
Do you think you're getting a little too bullish, or
no?
So why don't you double down? Why don't you buy more?
No, there's no reason to.
Dude, at least I have calls. You have shares, right? Or you have calls or shares?
I have both.
Oh, you're playing the options on SM? You're playing financial derivatives?
Well, I did. I have three things. I have shares, I have naked calls, and I have spreads.
Whoa, who is this guy, bro? Where did this guy? What? Steve, the guy who'll barely buy another coin at an XRP, is doing spreads on SMCI?
Well, listen, I explained this 2 or 3 weeks ago, and I think most people thought I'd lost my mind and I fell on my head or something. But I called it from the beginning that we were going to see increased CapEx across the board. We were going to see big CapEx numbers for 2024 come in during earnings. And it was going to lead to a thesis of NVIDIA not being able to produce enough chips. And if that's true, the companies that are their suppliers for certain things, including SMCI, should see increased levels of revenue generation. And you're playing it on if they're going to get a clean bill of health, which I have to think if BDO is coming in and they're going to stand by this, I think there's at least a 50% chance that these accounting problems are going to go away. And if that happens alone, this could fuel it. I mean, this is a company that was over $100 and it fell because of all this stuff. So if the accounting stuff goes away and then the narrative about them selling more product to NVIDIA, I think this can easily be 50 next week. It could also easily be 15. I mean, if it doesn't go that way on the accounting side.
So the stock market is a casino on Palantir, but you're buying spreads on SMCI.
Yeah, because there's a much different reason about it.
Why is that not a casino, though?
Have you looked at the numbers from SMCI?
No, I'm just saying your short-dated options feel like gambling to me.
No, because they haven't reported in 2 freaking quarters. And when they haven't reported in 2 quarters and you're still going off to June 24 and their revenue growth was over 100% year over year, because they went from 7.1 to 14.9 billion, and their net income almost doubled, going from 640 million to 1.2
No,
billion.
Steve, you can say whatever you want. The point is you're gambling on spreads and options. Like
I'm
that's
not gambling.
How is that not gambling? That of course is gambling. If you're wrong, you lose all your money. That's gambling.
I'm taking an educated risk based on 2 quarters that haven't been reported yet, based on what the growth metrics should be, based on what we've seen with the spends from the Mag 7 in the past 2 quarters, and what they're saying going forward.
So you're taking an educated risk that's a gamble.
I'm taking an educated risk because this thing is trading at 12 times earnings.
Look, I'm not disagreeing with the numbers. I'm just saying you're saying the stock market's a casino on one stock, but on the other stock, because it's quote unquote undervalued to you.
When people are people are willing to pay 250 times earnings for freaking Palantir. I'm making an educated guess on something that's trading at 12 times earnings right now, has a short interest of over 13%, a small market cap, and all of the data indicates that they've been making money over the past 6 months that hasn't been reported. And they're going to make more money next year because
the
of how
fact
much
that you
CapEx
said
went
the
up.
fact that you said it hasn't been reported as a public company already tells me this is a gamble. Not saying you're wrong on the numbers.
This is going to be really good or really bad. But
So that's a gamble. That's literally the definition of a gamble. It's either good or bad.
Better
Right?
that this is BDO coming in, and they're going to stand by it.
All right. Well, look, I'm in the trade with you, so I hope it works out.
And remember, this isn't a long-term investment for me. This is a trade.
That makes it even more of a gamble, in my opinion.
And no, it's not a gamble. This is a trade based on a lot of due diligence and a lot of information that is indicating that this could be a coiled spring waiting to burst. People chasing Palantir here is crazy.
Well, it is happening. 320.
Yeah, it's gonna be 120 by the end of the day. You watch.
I told you should have wrote that article with the price target. That would have been, again, bro. You would have been goated on Seeking Alpha if you had a $125 price target at 60 and it happened in a month. I mean,
I said it here. That's all that matters.
Yeah, but you said it in a way that wasn't as serious. That's the problem. You said it in a joking way. I didn't even say it. So, I didn't give a price target for 120. But
I did.
You did. You technically did. You technically did.
And what's crazy is why did that just happen?
What happened?
How badly did I just mess up? Fortinet freaking continues to go up. I got called out of it. I should have freaking bought those calls back.
Well, you sold it at what, 70 Fortinet?
I'd have to look. I don't remember where I got called out. 75 or 78, something like that.
HIMS is up 10%. So hold on, let's end on this discussion because we were talking about this yesterday. What is your methodology right here for finding the next Palantir? Because you keep asking me what's the next Palantir. I don't have an answer. How are you trying to figure out what's the next?
I'm not. I don't think that this is a stat picker's market right now. I don't think that there is any clear-cut, massively undervalued companies the way there was, or misunderstood companies the way it was. I don't think it's nearly as easy. You could have thrown a dart at companies 2 years ago and had your pick. There were so many opportunities, from REITs to Palantir. So many opportunities. It doesn't exist right now. Look, I think now you're betting on the next 5 years, and I'm going to say something, and people are going to think I'm nuts, but something like Serve Robotics, that's definitely incredibly overvalued here. Something like that has an interesting growth story if certain things fall into place, but it's a lot of what ifs. Maybe LiDAR. There's some companies I'm looking into. If you think that self-driving is really going to be a thing and robots are really going to be a thing, LiDAR could be interesting, but I really don't know. I think the energy trade play is pretty much done. I don't know.
So market, guys, is going down a little bit. We got this headline right here. Don't know if it's accurate yet, but this is the report. President Trump told Republican lawmakers he plans to issue reciprocal tariffs as early as Friday, which is today. So I guess a little bit more of some tariff concerns is what's tanking the S&P right now. It's down 0.5%. It's not really tanking, but you get my point.
Yeah. Oh no, the Nasdaq's at 19,600. Oh no.
Also, Goolsby said, I think it will take longer than end 2025 to get to a neutral policy rate. So, yeah. All right, Steve. I mean, it's been a fun week. I will link your article right here in the chat for everyone who wants to read it. Google article for Steve from Seeking Alpha.
I appreciate it because Google is such a screaming play right now. Like it's incredible that this is going down. It's incredible.
No, I agree. And I'm probably going to buy this dip. I mean, this is 18 times 2026 earnings is the cheapest we're going to get. Unless, we get a recession or anything like that. If we avoid that, this is going to be cheap.
I mean, bring up that one chart I made. Bring up the one about the cash from operations and CapEx and really click on it and look at those numbers. This is a company that's doing $62 billion this year and $61 billion last year in buybacks. And every dollar that they pump into CapEx is making the cash from operations explode. And think about this. They've had, and the reason I made this chart is because they continuously increase their CapEx spend. It continues to drive cash from operations up. What happens after next year when they put $75 billion into CapEx? Their cash from ops probably goes to 140, 150, and then they go into a maintaining phase. And let's just say their maintaining phase is 40, 45 billion. Their free cash flow is going to explode.
Yeah.
Because cash from ops isn't going to come down.
I agree. 100% agree. I don't disagree at all.
Yeah, I mean, the biggest opportunities right now are the Mag 7, which sounds crazy. They are, Alphabet and Amazon are screaming opportunities right now for long-term investors.
Yeah. All right, Steve. Thank you. We will talk to you later. Appreciate your insights. Later. Yeah, so that tariff headline is getting the markets a little scared. Palantir continues, dude. It hit 115.3. It's not easily slowing down right here. I mean, back to 114.7, which is not really a dip. But I don't know. Are the tariff concerns that big of a deal? Probably not. I think the market's not going to get as easily fooled as they got last Sunday on tariffs, especially if they don't actually go into effect. But we'll still probably see some volatility in the mean term on it. What else do we have? Arnie, what's up? Imagine Palantir is like this and we are neither in greed. Yeah, that's true, dude. We are neither in greed. We're in neutral on fear and greed. Imagine when we get to greed what Palantir ends up getting to. Shout out to Arnie. Arnie, I think you're gonna be on Palantir Weekly tonight, right? We got a lot to talk about when it comes to Palantir. And Arnie shared a great chart this morning, by the way, on when he bought Palantir. And at the time, when he was buying it at $8, he was buying it theoretically expensive because it was trading at 35 times EV to adjusted EBITDA, which, again, even at $8, right, there were all these concerns on, like, is it expensive? Is it expensive? But if you looked at 2025, he was buying it at 10 times free cash flow, which is very cheap for a company like Palantir at the time. And $8 is now $115, which Arnie says is the definition of value investing, which it is. There's a certain type of people love to use the term value investing, but value investing is finding something when there's value. And that's what he did on Palantir at that price. See you tonight. Okay, awesome. Arnie will be on tonight. Amit, what's your SMCI position? It's 5 leaps for $50, January 2027. I was thinking of selling them as soon as SMCI pumps, but I mean, if it pumps and it's a sustained pump, I might just leave them, and maybe SMCI continues to go higher, and those $50 leaps get in the money. But we'll find out next week. Yeah,
You're trying to get Hood at 54.30. Where's Hood? Where's Hood right now? 54.60. Yeah, I mean, dude, I really do think Vlad saying that they're doing a video call. I know people may think that's not a big deal, but like this is the type of stuff you do when you're a company that is really trying to become a world-class company, and you're trying to get people to be excited about your year. And I think also the reason they're doing a video call is because they probably have a lot to announce in terms of what they're setting up for this year, and so they're probably going to give a lot, not real guidance, but rather just like top line roadmaps on how they're going to attack 2025. And I think they're going for it. So it's going to be a fun one. It's going to be a fun one. Uber right here, 73.22. Bitcoin, 97. Costco down 1%. Fortinet, 104. And CrowdStrike right here at 423. Yeah, I don't think they're going to be shit on the first video call. The earnings are probably going to be decent on the first video call. If they have a video call, they have something good to tell. I agree. The conference call did have a bunch of audio issues last quarter, but I don't think it's about that. I think Vlad's just realizing, like, dude, Vlad watches everything. Vlad sees everything, bro. Like, he sees, like, he's on Twitter. He sees every tweet. He might not respond or like every tweet, but he sees everything. And he's obviously seeing the hype around Palantir in terms of the clips of Carp talking and people excited, yada, yada. And he sees that, and he probably wants to replicate it for Robinhood, which is smart. I mean, a lot of people are upset at Noto for, not giving retail any type of, Noto has not done a podcast with retail in 5 years. Are you kidding me? I still don't. Again, I think SoFi is going to be 25 this year. But the idea that Anthony Noto has not sat down with Tanner or Tevis or Roy or data-driven investing, it's asinine to me. It is absurd. It is absurd. I mean, what type of high horse do you have to be on to not sit down with someone who's making a video about you every day? Hey, it's quite frankly, it's like, it turns me off to SoFi completely. And I don't know what world Noto's living in as an ex-Goldman banker that thinks he doesn't need to talk to retail, because the institutions aren't buying your damn stock. Someone else is. So it would behoove you to at least give them 5 minutes of your time, but he chooses not to. And I don't know. It's very weird to me. I don't like it, but that's not what Vlad and Carp are doing. And by the way, Vlad's not just appealing to retail. 83% of institutions, 83% of Robinhood is institutional investors. So it's not like he needs retail to pump the stock, because he doesn't. Retail, it's great to have a retail investor base, but it's majority institutional. It's always been majority. Palantir has always been majority retail. Now it's 50-50. But SoFi is majority retail, and not talking to them is just weird to me. But I don't know. I think in the future, we're going to see a lot more changes with these companies and how they interact with investors. Meta's at 712. Hims is at 43. Rocket Lab 2840. Robin at 5450. Bitcoin 97. Uber 7347. CrowdStrike 423 on the day. Did you see his tweet? Yes, I did see his tweet today. It was a very bland tweet. I don't know. Maybe things change over the long term. Adam says, once you lose retail, you're not getting them back very hard. Yeah, I agree with that as well. Evan said, I just sent a tweet out in Noto. I mean, hopefully he responds, bro. Hopefully he's down to hop on his Twitter Spaces. Like, even if he doesn't want to do video, he could hop on Evan's Spaces. But like, my point is, here's why I'm annoyed about this, okay? If you're going to talk to Bloomberg for 5 minutes and 20 seconds after earnings, you can't talk to Tanner for 5 minutes. You can't hop on an audio Twitter Spaces for 5 minutes. Like, it's one of those things where I don't get it. And I don't know. Maybe I'm being too uptight about it, but I think he should be able to do it. All right, let's get an update across the street, and then we'll keep going from there with the other headlines that we have.
Reciprocal tariffs as early as today. Given that and the UMISH headlines that we just mentioned, we did lose a little steam from the open.
Don't know reciprocal on who or what, but that is enough to spook the market. Obviously, this is how we started the week, with concerns over tariffs, the headline risk here. We know it's not going away, but we're waiting to see what the strategy is and how it will play out. S&P down 0.6%, but to your point, it was already lower coming into the hour. And you got this sort of the consumer confidence numbers you mentioned. So weaker consumer confidence and higher short-term inflation expectations. Sure, that might be around tariffs. But Jan Hatzius of Goldman Sachs, that chief economist, was just telling us he's paying attention to it. He wants to see more evidence that that's true in places like the New York Fed Inflation Expectation Index, because the survey of University of Michigan is small. It's a little politicized. These surveys have limitations, but it is a trend worth watching. We also got that hotter wage number today, which, immediately the bond market reacted to. We saw higher yields, but then that faded a little bit because of this idea that maybe it was the work week and Jan talked about that as well. So a few cross currents out there, and we still have earnings and a lot of big movers on that front. Expedia still up double digits, and we've always got these big winners and losers on these earnings day. That's been a theme of all week.
Yeah, we have had some all week long. There've been pockets of really strong guidance and some lower guidance, but today has definitely a couple of winners. We're going to interview one of them later on this hour. Let's start, though, with this morning's econ data. We did have a noisy jobs number, weaker consumer sentiment, these higher inflation expectations.
Okay, we got two headlines. Amazon eliminates reference to inclusion and diversity in its annual report following pullback on DEI efforts. That's following Google and Meta. So it looks like Amazon is scrapping DEI. Kind of all big seven are essentially getting rid of it. And Palantir right here, 115.4. I'll keep you guys updated if we get 116. There's really no wall. There's like 10,000 shares. So 116 might be on the way.
Those fears around tariffs. What does it mean for rate cuts moving forward? Joining us with her outlook is Stifel's chief economist, Lindsay Piekza. Lindsay, great to have you. What do you make of? Let's start with the jobs number and the wages there. How much of that moves the needle versus more noise about trade and tariffs?
Well, it was a somewhat disappointing headline number, but some of that, as we know, can be explained away by weather-related weakness. But when we look at some of those other components, as you mentioned, the decline in the unemployment rate back to 4%, upward pressure on average hourly earnings, this suggests that we're still seeing tight-ish labor market conditions. And this is going to continue to perpetuate the difficulty for the Fed to provide any additional relief going forward amid ongoing concerns of inflationary pressures, not just from the labor market, but as you mentioned, from other fiscal policies potentially coming down the pipeline.
Have you been so absolute as I'm thinking of a couple of Wall Street desks that have said the window for cuts is basically shut? Would you go that far?
No, I don't think the window is shut. I think that as we continue to see conditions normalize, the data move towards this normalization process, I think there is some room for further relief from the Fed, but it's going to be very tempered, very cautious, and likely if we do see any additional rate cuts from the Fed, it will be pushed out towards the second half of the year. The Fed at this point is very comfortable on the sideline, giving committee members more time to assess the incoming data, giving the committee members time to see how the data evolves and see how fiscal policies evolve and impact the economy.
What are you hearing from?
All right, so nothing too crazy from the tariff headline or from the inflation read with the non-farm payrolls we got this morning. 115 on Palantir, not 116 yet. Tom Lee just added Palantir to his Granny Shots portfolio. So they had a February 2025 rebalance. Did they have Palantir in this before? No, they didn't. Wow. They added MicroStrategy, Palantir, PayPal, Qualcomm, and GE Veranova, and they deleted a bunch of the other ones. Let me pull this up for you guys real quick. Interesting. Well, Steve was asking who's buying. Tom Lee. Tom Lee was buying. There you go. Tom Lee adds Palantir to the Granny Shots ETF. So notable names are Palantir, PayPal, MicroStrategy, Apple, Amazon, AMD, Nvidia, Netflix, CrowdStrike, Palo Alto, Google, Meta, Tesla, Microsoft, Costco. Palantir makes the Granny. So Granny Shot is his ETF. It's GRNY, and basically, I think the theme of the ETF is essentially like really good companies, like Granny Shot, like Grand Shots, right? Like, I mean, I really don't know what the theme of it is. It's just a theme where they try to invest in the best companies they can find. But it's called Granny Shots. So top 10 holdings in it are Axon, CrowdStrike, Meta, Goldman Sachs, Costco, Amazon, Netflix, Tesla.
And it looks like they added Palantir here today. Easy wins, is that the theme? Oh, granny shots are easy wins? I didn't know that. Oh, it's an easy free throw. Okay, so I play basketball. I should know this, dude. I play basketball. I was starting JV point guard freshman year, dude. I played basketball. Palantir, I think she wants 116. Resistance at 116 is 17,000 shares. I think she wants it. I think she wants it. Palantir was in granny shots before. That's weird then. I guess maybe they added more, or maybe they took it out a while ago. But it looks like they definitely added it after earnings here today. Or they might have added it tomorrow or yesterday. Granny shot is an easy basketball free throw shot. See, I can't believe I didn't know that. Dude, I can't wait till Luka Doncic and LeBron hit the floor, bro. I'm watching my first basketball game in a while. Like, I want to see that game. That's going to be wild. And now we got Butler to the Warriors. I mean, that probably needed to happen, but I don't know if Butler and Curry is going to be the best mix. But Doncic and LeBron is going to be wild. It is going to be wild. Call Steve at 116 and ring the bell. Dude, I kind of feel bad for him. I kind of don't. Like, I feel bad because, like, I get it. Like, I understand. He's in a tough spot, but I also don't feel bad because, like, I don't know. It is what it is. Like, this is the market deciding this is what they care about. And again, it just doesn't feel like 2021 to me because A, this is a real company, and B, I think big money is riding this. Like, little money was riding GameStop. It was just so much little money that rode GameStop higher. I don't think this is retail money. I think this is much, much, much more larger institutions that are just saying, screw it, we're going to get in. Now, granted, it's crazy because obviously the metrics that Palantir trades at are wild, right? 90 times price of sales, all that stuff. So the fact that institutions, if it is institutions, are still buying it at these levels, it means they truly don't care. And that means this thing could continue to go much higher. Be real, you're enjoying it. Palantir up, Apple down. Well, I mean, his Apple thesis has just been, Apple probably will do well. Apple will probably be a $300 stock one day. It's just, I don't understand defending Apple here. Granted, you know, he can't make sense of the Palantir numbers. I get it, but I can see a better defense for it versus Apple. It's just, and the real reason for that is not because of Apple's numbers or buybacks, is because every initiative they've tried in the past couple of years has failed. Cars failed, Vision Pro failed. I would say any upgrades on the iPhone have failed because we haven't had a super upgrade cycle. Apple Intelligence failed, right? There's just been nothing that's worked, and that's okay. I mean, like, it's hard to make things work when you're at this stage of your cycle as a company. But then you got to increase the dividend. You got to do something if the growth is just not as high. Oh, we got our bull of Apple in the chat. Evan right here. AirPods, Apple Watch. I mean, first of all, AirPods were from 10 years ago. So that's very old. I wouldn't say, I'd said in the last 5 years. Second of all, the Apple Watch is stupid. I've never thought the Apple Watch is interesting. But, like, yes, they've sold a ton of Apple Watches. It's not moved the needle in terms of products revenue. I personally just think the Apple Watch has never been that interesting. It comes down to, can you make the phone better? And it hasn't got better. And I accept that it's hard to make the phone better. But that means you're not going to necessarily have a ton of growth if half of your revenues come from a device that's not getting any better. I really, a lot of people like the Apple Watch. My mom bought me an Apple Watch back in 2018, and I made her return it. She got it for me for my birthday, and I said, I'm not going to wear this. Like, I was just like, I'm not even trying to be rude. I'm like, I will not wear this. Like, I just know I'm not going to wear an Apple Watch. I don't wear a watch ever. Like, but there's some people that are like real watch fans, and they like seeing their texts on their wrist or something. But I know I'm not going to wear it. Chase says there's so much Apple could do with the watch, but they just don't. Yeah, that's also fair. Again, I'm more biased here because I just don't wear watches, but in general, it's not like watches are moving the needle for the stock. So I don't think it's the best argument. Michelle said, I had the Samsung one first. It was great when I had a job. I wasn't allowed to use my phone or even have it on me, so it was handy for emergencies. Interesting. Yeah, and I know there's a lot of health benefits as well for the watch. I mean, that's definitely a big bull case for it. but not sure if Apple has fully capitalized on that. Okay, what else do we got? What else do we got? Outside of Palantir, Friday is relatively not that interesting in terms of nothing crazy happening. We do have the Affirm CEO. Let's hear what he has to say about their earnings.
Profit. The quarter also getting a boost from Amazon and Apple partnerships. Joining us to break down all of this is Affirm founder and CEO Max Levchin. Max, it's great to have you back on. Welcome.
Thank you for having me. Great to be here.
So what drove the outperformance this quarter?
We had a great fourth calendar fiscal second quarter for us, and it really for great first half of the fiscal year. Just across the board, consumer is strong. They're shopping, they're borrowing from us, and they're paying us back really well. We saw really strong performance in travel still, which may be a little bit surprising, and looking forward to more of it given Super Bowl is approaching. And really nice recovery places like electronics, ticketing, general merchandise is always really strong. We partner with the folks like Target and Walmart, of course, and Amazon, as you mentioned. So just across the board, Affirm consumer is thriving. They're shopping and they're doing well.
Yeah, you mentioned credit, and I am interested in this because other credit card issuers have reported some rising delinquencies. So how are you managing credit, and what are you seeing?
Our products are built to offer consumers more control, more certainty. We don't charge late fees to make sure that we have all the incentives to only make underwriting decisions that will be profitable for us and good for our merchant partners and financially sound for our consumers. We're in control. Credit outcomes are an input into our model, not an output. We don't lend and hold our breath. We underwrite every single transaction every time. That's how we've been able to post actually a slightly down delinquency number relative to last quarter.
Yeah, you've been consistent on that message, Max, for years now, and Street has obviously found a way to embrace it. There's been some discussion today as to whether or not your guidance on sales and GMV is a little cautious. We've had a lot of discussions even in the past few moments about the uncertainties, the known unknowns on all kinds of things policy-wise. Would you go along with that argument?
As our CFO would probably have me say, we take our guidance very seriously. We enjoy posting numbers that we know we can achieve and then some. So we stand by the numbers that we print. I think we just do a great job when we say what we'll do and do what we say.
Are your wins coming at the expense of the credit card industry?
Yes, we are taking share, not just from the credit card industry, but also other BNPL players. If you look at the public data, that at this point, we are at such scale that you can infer a lot of our relative growth. You can see that we are penetrating e-commerce, we're penetrating offline, and relative to our largest North American competitors, we're about 10 points ahead of them, growing in the US, and globally, probably more like 20 points. So we're taking share from everyone.
Yeah, I was just going to ask then, how do you define the total market, especially as you continue to expand, I think, geographically as well? The UK looks good.
That's right. We just launched in the UK. Very excited about that. Spending a lot of my time in London, which is my favorite city in the world. So I'm only too happy to go there. But our total addressable market is e-commerce and commerce. I'm a little bit of, as you pointed out, Carl, I've been saying this for years, but I think credit cards are the coal-burning factories of payments. It's time for something better. And what we do, paying over time with crispness and clarity of fixed schedules with no late fees, no deferred interest, no compounding interest, just a better product. And people are recognizing that in droves.
So there was speaking of credit cards, there was, by the way, I know who Matt Damon is. Okay. You guys are saying he looks like a Temu Matt Damon. I know who Matt Damon is. I think. I'm trying to think of a movie Matt Damon was in. He was in Good Will Hunting, right? Yeah, I think so. He was in the Mars movie when they went to Mars. Palantir 115. He was definitely in that. He was in Interstellar. He was definitely in Interstellar. Definitely in Interstellar. Okay, so Josh Hawley came out with a tweet the other day saying that he's partnering with Bernie Sanders to put a cap on credit card rates. And so I'm curious, do you guys think that's a good idea? They're trying to cap credit card rates at 10%, which means the percentages right now range from like 25 to 30%. If they capped it at 10%, then we would have incredibly low interest rates on credit cards. However, the downside is companies might not give out credit and they might not approve you if they're only going to get 10% from you. So Hawley and Sanders introduced the bill to curb exploitative credit card interest rates, provide relief to working Americans. They said working Americans are drowning in record credit card debt while the biggest credit card issues get richer and richer by hiking their interest rates to the moon. It's not just wrong, it's exploitative, and this needs to end. Capping credit card interest rates at 10%, just like President Trump campaigned on, is a simple way to provide meaningful relief to working American people. Let's do it. And then Sanders basically agreed with what he had to say. Is this a good idea or a bad idea? Let's make a poll in the chat. I feel like I don't know enough about the credit card industry if this is good or bad. But yeah, those rates can get very predatory. But if at least you're getting money, even if it's at a predatory rate, because if you don't get the credit at all, I feel like that's technically worse to an extent, but I don't know. Good idea for credit rates to be capped. I don't know if Trump's going to follow through on that. Trump did campaign on that, but I don't know if he actually gets that done. That's a big thing, dude. All these credit card companies, Capital One, Visa, American Express, SoFi, Hood. I mean, all these guys that are doing credit. I mean, for SoFi and Hood, it's a small part of the business, but for the other guys where it's like trillions of dollars of volume and massive amounts of interchange fees and revolving balances, like that's a big part of the Bank of America, JP Morgan, all these guys. If it's capped at 10%, I would imagine the bank stocks would take a little hit if that goes into law. 67% of you say yes. 67% of you say yes. Big Bear AI up 25, dude. That is, again, that's a nice little squeeze we're seeing here. That's the only way I can explain that. The DoD contract they got is like a prototype. It's not even like some $100 million contract. It's not anything, to my understanding, that was that special. It was a good contract, but it's not like, you know, Project Maven or anything like that. But yeah, I think it's a squeeze. Uber right here, 75.11, up 7. Wow, Uber. So Tesla's got to be down if Uber's up. Tesla's got to be down. Yeah, Tesla's down. The thing about Uber is Uber was undervalued at 60. It was undervalued at 65 after those earnings, even though people don't like the whole FSD perception of Uber's future growth. It was still undervalued. It traded at 22 times free cash flow. That is cheap. So it makes sense that Uber is getting this move. The question's going to be, is there a world where the narrative shifts outside of the numbers and FSD becomes like the main focus? And until that happens, and really it's up to Tesla to execute to make that happen, I do think people will pile into this one because it's one of the cheaper tech names that's out there. And it's a lot cheaper at 60 than it is at 74. But the earnings were good. The earnings were not bad for Uber at all. It's just, you know, Dara's ability to explain the future of autonomy that some people are struggling with here. Doug has a good point. If we cap credit card rates, then if consumers can't buy things on credit, producers can't sell stuff. Therefore, the economy collapses. Yeah, that's an argument. If we destroy the credit card industrial complex in the United States, where so much of our goods are bought on credit, that could definitely take a hit for company earnings. That could take a hit for company earnings. If you cap credit card rates, no one will lend unless you're a prime or super prime. This will destroy the economy. Okay, let's get some stats on this. Let's try to figure out how much of our economy is actually spent on credit. So I'm going to ask ChatGPT, how much of the American economy is spent by credit cards every year? How much do Americans spend in credit? Okay, in 2024, personal consumption expenditures accounted for nearly 68% of the US GDP. Americans' total credit card balance reached 1.16 trillion as of the third quarter of 2024, which is probably a little bit higher from now. Americans paid approximately 120 billion per year in credit card interest and fees from 2018 to 2020. How much gross volume in the US economy goes through credit cards? It's got to be tens of trillions, right? 5.76 trillion. Okay, so transaction volume was 10.9 trillion and credit cards was 5.76 trillion out of that 10 points. So it's 52% of total card-based transaction volume was credit cards in 2022. Federal Reserve reported that general purpose card payments encompassing both credit card and debit cards reached 153 billion transactions, totaling 9.76 trillion. Yeah, that's a lot of money. If we get rid of credit cards, that's not going to be the easiest thing in the world to deal with. All right, if we cap rates, I mean, it's going to definitely send a shock to the system in terms of how credit cards are currently used by Americans. Palantir right here at 115. Someone said Bill Ackman bought Uber. Is that true? Did Bill Ackman buy Uber? Is that true or false? Let me see. Bill Ackman. Holy shit. Bill Ackman. He bought Uber. Oh my. January, he buys Uber. He buys Uber. This was tweeted just now. Oh my goodness. Ackman is in Uber, which means Ackman technically owns a little bit of Grab because Uber owns 14% of Grab. So welcome, Bill, to the Grab family. Now I wonder if he sold his Nike to be able to fund this. I've been a long-term customer and admirer of Uber, beginning when Edward Norton showed me the app in the early days. I was also fortunate to be a day one investor in the company through a small investment in a venture fund. While a great business, Uber suffered from erratic management. Since he joined the company in 2017, Dara has done a superb job in transforming the company into a highly profitable and cash-generative growth machine. We believe that Uber is one of the best managed and highly quality businesses in the world. Remarkably, it can still be purchased at a massive discount to its intrinsic value. This favorable combination of attributes is extremely rare, particularly for a large cap company. We will have more to share about our thinking about the company shortly. And they own 30 million shares. And they started in January. So hold on, what was Uber in January? Uber in January. Yeah, this is a middle finger to Tesla. That's what it is. Uber in January was $63. So he's up 20% if he got all 30 million shares at those levels. Doug says, I don't think he sold Nike. He was talking about the turnaround in the Super Bowl commercial yesterday. Well, he had to sell something. Maybe he sold more Google, CPKC, Hilton Hotels. He had to sell something to make this. I mean, 30 million times 60, that's $180 million, right? 30 times 60. Yeah, it's $180 million that they spent. No, is that 1.8 billion? Hold on, am I tripping? 30 million shares times $60 is 1.8 billion, right? Yeah. Whoa. And that's on the that's if he got the bottom. If he got the bottom, it's 1.8 billion. It's probably 2 billion because unless he bought all 30 million shares at that exact moment. Oh my. That's why Uber's pumping today, bro. Holy crap. There you go. All right, what do you guys think? What do you guys think? Bill Ackman and Uber. Bill Ackman takes a stake in Uber, buying 30 million shares since the beginning of January. I'm going to tweet this out right now. Uber, he goes for it. I mean, I can't complain about it. I don't think it's a bad argument at all. It's obviously undervalued. It's just, that's a heavy stake, bro. 1.8 billion. What if he uses this announcement to start trimming his Uber position? It would definitely be a Bill Ackman type of move to do that. Bill Ackman takes a stake in Uber. He started buying in January and now has 30.3 million shares. 30.3 million shares. The position is currently worth it's worth well over 2 billion now, right? It's worth well over 2 billion. Wow. I mean, this is incredible. So he technically owns a little bit of Grab here. I mean, he owns 14% of Grab via Uber. Did he sell the Google? We don't know yet. But I think, is Grab pumping on this? Could that be the reason Grab was up this morning? People knew Grab's up 3%. I mean, this doesn't really affect Grab. I mean, just unless Uber sells their stake in Grab, which I don't think they're going to because they really believe in the company. But it does mean that Uber gets a little bit more mainstream attention. And if that happens, that, maybe there's a world where Grab gets some of that attention. But in general, he does own a little bit of Grab, given he owns Uber. And so if Grab does well, that just helps Uber's stock, right? Because they are going to be beneficiaries of their balance sheet increasing from their equity stakes.
Wow. Bill Ackman, huh? So Nike and Uber are his plays. Nike and Uber. And then Google. Amit, what's next, bro? Let's find an AI company in the medical field. Dude, everyone's asking what's next. Like, it's hard to find what's next. It's so hard. The best idea I have right now is Grab. That is my best idea. That's after a lot of due diligence, and I know it's not super sexy. People want a 10x. I'm hopefully aiming for a double in 2 years, but it's the best idea I have right now. Everything else, I'm out of ideas, guys. I'm trying every day to find good ideas. Medical AI is interesting. The problem is Tempest already pumped, and that would have been your medical AI play. Healthcare, by the way, as a sector has done horrible. Healthcare has done horrible as a sector since 2024. Like, healthcare has not been good. And there were a lot of people that sort of dabbed into healthcare AI stocks, and they got crushed. Tempest is the only one that's worked, and that's because Nancy bought it. But outside of that, healthcare AI to me feels commoditized because I think other companies could just incorporate healthcare into their AI offerings. Or even if healthcare companies incorporate AI into their main business, does it radically increase margins today? If it doesn't, then I don't know if that's the best sector. But Tempest got the bid because of Nancy. But in terms of actual other ideas, Celsius, not a good idea. Chipotle, not a good idea in my opinion. Next decade, that's a long-term hold. You know, you got to kind of just let that play out. Big Bear AI played out to me already. I mean, if you want to chase while it's up 200% or 40% or like 80% this week, then be my guest, but I'm not chasing that. If you were in the squeeze before, then great. Mag 7's not really a new idea, but any of the Mag 7 you buy are probably going to do fine in 5 years. SMCI, I guess, is another idea, and that's just betting on an earnings pump kind of. Robinhood's been a great idea all year, and that's done very well, but it's not really a new idea. Meta has been a great idea again, but that's part of the Mag 7. Netflix would have been a good idea early this year. I don't think anyone expected it to get 19 million subscribers, but I didn't expect that either. And like, it is what it is. And the problem is, you know, for those that are looking at the penny stocks can never be good ideas because it's literally luck, in my opinion. Like, it's like, unless the thesis is so good, if it's a penny stock, it needs a catalyst. And that's why I like Grab. Although Grab looks like a penny stock, it's not a penny stock. It's an $18 billion company. And there's something real behind it, right? Spotify was a great idea last year. This one pumped up $630. I mean, a lot of these stocks are just up. And it's hard to find where the significant asymmetry is in terms of undervaluation. AMD is, I guess, a good idea if you think they're undervalued, but I just rather buy NVIDIA. I mean, NVIDIA was a hell of a good idea over the past week when it dipped 20% for no reason. So I would say that was a good idea. And I think a lot of us took advantage of that. NVIDIA at 128 right now. BlackBerry, I don't know if that's a good idea. Some people swear by it. Again, I have not done any DD on this one, up 1.3%. But there is a community that cares about that one, so that might be an idea. Palantir here, 114. Palantir has been a great idea. Might not be an original idea, but it's still been a great idea this year. HIMS has been a great idea for those that were in this name. Oklo has been phenomenal. I completely missed this one. I just wasn't willing to take a bet on a company with no earnings. I couldn't do it. But if you did, then you've done very well. Lyft, where is Lyft? We haven't looked at Lyft in a while. Lyft is, yeah, see, I was thinking of buying this thing at $9 last year. I never pulled the trigger. It's at 14, so it's not like it made that much of a dramatic move. Their free cash flow margins went up. That's what I remember when I was looking into Lyft. But again, I mean, if you're talking about undervalued ride-hailing apps, I feel like Uber would be the winner. They're like, why would you even go for the second best when you can pick Uber, given it's cheaper as well? Google 184 is a great idea. Is Google at 184? Is it actually at 184? I was at 186, down 3.4%. If it gets into the low 180s, it gets very, very interesting. Amit, are you going to write calls for NVIDIA going into earnings? I'm not. I really want to. I could pick up like $5,000 of premiums if I did, but I'm going to let NVIDIA ride. I think they crush earnings and hopefully it goes higher. Oklo does not have revenue. Symbiotic, well, that one got cracked a couple days ago, right? Yeah, it fell pretty badly from 34 to 26. I mean, maybe this is a good idea. I got to look into this one. I know it's taken over Walmart's robotics business, but definitely something that I got to look into more. Lucid is not a good idea, in my opinion, and will never be a good idea. So Not a fan of Lucid. Nubank, I think, is a good idea, but I do think it's like Grab. It's going to take time. I think it's not going to be like a double overnight. I don't know. So if you bought Nubank at 10, does Nubank go to 20 before Grab goes to 10? I guess is the question. Or if you buy Nubank today, does Nubank go to 26 before Grab gets to 10, which would be a double on both? I don't know. I think Nubank probably gets there closer because it was already close to those levels before, and Grab probably takes some more time. But both of those, you're waiting a couple of years, in my opinion, to get it there. Pat's up 32% in the last 6 months. Yeah, Sachin likes this one. I don't know enough about it, but Sachin does like it. Robotic processing automation obviously can be enhanced with AI, so I imagine there's something there in terms of a thesis. Energy infrastructure, I still think is a move for 2025. ET, Kinder Morgan. I know Chris has been talking about Venture Global. I know nothing about that stock. I know he did a podcast about that last night. It's down another 6%. It's at a really crappy IPO, dude. They IPO'd at 25, stocks at 16. I don't know anything about this, so I would have to really look into this one and get Chris's DD on it. But I would imagine this is another long-term hold, like next decade. This is not a sort of 2025 idea that can materialize this year. So a lot of these, and again, that's okay. In 2023, you could buy something and then within 5 months, it could turn around, maybe even double, but we're not in 2023 anymore, right? So it makes sense. Dude, we also haven't had any IPOs. We're still waiting. It's February. Like, I'm waiting for the IPOs. SoundHound is flat on the day. NVIDIA 128.5, but we haven't really had any meaningful IPOs yet. Palantir is still holding 114 like a champ. 114.22. Neo, I don't like Neo, dude. I mean, I don't know. A, it's China. B, it's like, I just rather buy Tesla. Like, I think a lot of people get into Neo because they see it's under $5 and they think it can pump up back to 6, 7. It's like, maybe, but I don't think there's a thesis there that's that exciting at all. I've never been the biggest fan of Neo. There's good put premiums though if you're wheeling it, so it's not that crazy. Did you send that text? I say no, it was a joke. I didn't send the text I was going to send. I tweeted it though. It was a good tweet. People definitely were peer pressuring me to send it. There's no one to send it to, but I thought it was a funny tweet, so I posted it. Oxy is a good one. The problem with Oxy is that it depends on energy and oil prices, and I think we don't know if the Saudis are going to keep pumping. We don't know if OPEC's going to keep pumping. Like, we're in a little bit of a disarray. Also, I mean, Buffett loves this thing, and he's bag holding God knows how many hundreds of millions of this stock. So I imagine he's going to start either take it private, dude, or he's going to get even more shares because he's not going to lose on this one. And he's been buying this thing for a long time. So I think it's going to definitely catch a bid by Buffett over the coming months, even more. I think the best ideas this year have been Palantir, Robinhood, NVIDIA. I would say those are like really top 3 ideas that have all performed. Oklo's been a good idea, even though it's been very risky. Big Bear has been a good idea, even if it's been very risky. And then Tempest has been a great idea, even if you bought it because of Nancy, which probably de-risks everything about Tempest AI. But, and then we've had some other stocks. Hims has done very well. Baba actually has not done too bad this year. Reddit's been incredible this year. I did buy Reddit 164. So Reddit, I guess, has been a win for me this year so far. But outside of that, super asymmetric plays I don't think we've seen. But again, I don't think we can complain that there haven't been super asymmetric plays because we've seen stocks still go up very nicely. I mean, the S&P and the Qs are still basically at all-time highs, and all the volatility people thought we would get after a monster 2024, at least so far, we've seen some of it with tariffs and DeepSeek, but nothing definitive for people to feel like entire market's screwed, And that's because earnings have been so good. Oh, Rocket Lab's been great this year. How did I forget about Rocket Lab? Yeah. That one's up amazing this year, up 20%. Amit, are you bullish on SMCI earnings or bearish? I am bullish if they prove they can file their stuff on time. I think the valuation definitely is cheap. And the street is just afraid that the company is a fraud. But outside of that, that's the only due diligence I've done. Like, if they're not a fraud, the valuation is definitely cheap. 100%. Valuation is cheap. But if they're not a fraud, which I hope they're not, I don't want to say they're not because I have no idea, and they file their stuff on time and they announce that they have a new regulatory of accounting firm, yada, yada, then I think they should do well, especially if NVIDIA does well. I mean, if NVIDIA is selling more Blackwell GPUs, like SMCI is providing the liquid cooling for a lot of those as well. So I think it'll be obvious in hindsight if they weren't a fraud. If they were a fraud, it'll be obvious that why did you trust them? So to me, it's 50-50 on earnings. I mean, why did you never buy Cloudflare? You know, I never looked into their business. They're a SaaS name. Interesting one. They actually pumped a lot in 2021, I think. Yeah, they pumped with the whole bubble in 2021. But that was a big move, dude. They went from 15 to 220, just insane. And then they came all the way back down to 37. Now they're at 165. So even if you bought at the lows, you've done very well. It's up 16% today. Great earnings yesterday. It was actually down 10% before it reversed. I just don't know enough about the company, but they are a special company in the cloud space. From what I've heard from people, they've been at the cutting edge of innovation for 10 years when it comes to managing the cloud. You probably have seen their logo all the time when a website's not loading. So they're up there. I just never got that into them. But great earnings yesterday. What do you think of Wix.com? I've looked at this stock before. I don't know if the future is building websites. Like, yes, websites are always going to be important, but and I'm sure AI is going to help them too, but I've never been that excited about a website builder. Like Squarespace as well. I've never been that excited about them. So I think there's lots of other opportunities here. Are they up year to date? Wix year to date is up 2%. Oh, the past year they're up 65%. So they pumped in 2024 very nicely, but never got that interested into them. I mean, why don't you follow Cat? That's a good question. I'm more of a dog guy, but anyway, I should be following Cat. I should be following Cat a lot more. It should be. This is definitely one of the more important companies out there. 1.5% divvy. They tanked on earnings though, right? They tanked. Yeah, they did. They fell from 407 to 360. All right, so they got a little hit. But they're up 12% over the past year, up 2% year to date. Shopify. I've always loved Shopify, but I've just never established a position. It was on my DCA list this year. It was on my DCA list, but I just never got in. By the way, I finished my grab position yesterday. I bought the remaining amount of options I wanted, and now I'm officially loaded up the ass on this stock, or at least options on this stock. And yesterday I just said, screw it. I'm officially completing the position and it's done. So that's it. We're either going broke or we're going rich. And I really do think we've bottomed, bro. And maybe I'll be wrong on February 19th after earnings, but I really do think this thing has bottomed. And I could be wrong, but I think at this point, trading at 30% cash, I would add to the position and go even heavier if it gets to $4 on something stupid, but it would take a lot now for it to go all the way back down, especially if the dollar is cooling out. They would have to massively mess up earnings, and I just don't. I think earnings are going to be spectacular. So hopefully this position ends up playing out. It's going to be 2027 for the options, 2027. So we got 2 years to make this thing happen. We got 2 years to make it happen. Jason, thank you for the $99.99 super chat. Appreciate you. Why don't you like Blend Labs? BLND founder is amazing. Early Palantir employee, up 400%. A lot of real people have invested in it from Palantir, i.e. Joe Lonsdale. So I've never heard of this one. Blend Labs. Market cap is $1 billion. I literally know nothing about Blend Labs. Like as soon as I saw that name, I thought they made blenders, which is probably wrong. If they do, that'd be really funny. But it's a software company. Yeah, I know nothing about this. I'll take a look. If they got some Palantir alumni in here, I'll definitely take a look. Joe Lonsdale, also a great investor. So I will take a look at this one. Blend Labs, BLND. Year to date, it's up 2%. Over the past year, it's up 40%. All right, that'll go on the list. Blend Labs, thank you for the super chat. We will look at Blend Labs. They know AI for mortgages. Interesting. Kind of reminds me of Upstart to an extent. All right, we'll take a look at them. A lot of you guys know about this name. I never heard of this. Blend Labs. I never heard of this one. Okay. I guess we're gonna take a peek at that. Have you always lived in New Jersey? Yes, my whole life. Whole life been in Jersey. Whole life been in Jersey. All-time chart is looking like Grab and Hood. Yeah, I agree. It's they look very, very similar to each other. Very, very similar. Nvidia 128, AMD 107, Netflix 1018. Uber still pumping because of Ackman. Still pumping. 30 million shares. There you go. Shout out to our brother Chad. I guess he always shows up when I'm just like saying random stuff and he gets to be there. I guess I showed up for the deep content. Yes, sure, you did. I mean, we already freaked out about Palantir hitting 115 today, so you weren't there. And maybe we'll get back there. We were close to 116, bro, but you missed Steve getting upset while I rang the bell in front of him for 115. What else do we have? Do you think Grab earnings is going to print? I think the stock is closer to 550 after earnings, bro. That's my thoughts. I'll probably be wrong about this, but I don't care if the stock prints after earnings. I just care that the company executes. The money will always find the stock. I mean, if anything has told us that, Palantir is a prime example. The money always finds a good company executing, always. But the earnings really have to show that they're getting into becoming what I think they can become in Southeast Asia. And then the money's going to follow them. I mean, dude, the money found them after a rumor on them acquiring a company. Like, liquidity in the stock market is so unbelievably deep, and there's money just across the world flowing into the best idea, and it'll get out as quick as it gets in. But there is so much money on this planet that needs a place to go. And 7 trillion of that is in money market funds. And a bunch of that is in the markets. And so if they put up good numbers, I think they'll catch the bid. When will you add more to Tesla? Well, I added to Tesla yesterday. So now I'm just trying to see where the stock goes. I basically added at this level yesterday. It's not looking like I mean, we'll talk to Jason on Tuesday, but it's not really looking like a healthy chart. It's not like it held 370, not like it held 375. It's trying to test the intraday lows from yesterday at 363.18. The Chinese and Germany and overall Europe registrations were down almost 15% year over year, 20% in China and 59% in Germany. So like the general automotive headwinds are there. But the reason I bought it yesterday is because I saw they were starting to hire people for Optimus. So that got me a bit more excited that Optimus is going to become more real. But we could see some pain in the short term. Yes, I saw the Bill Ackman headline, Uber. He is officially in Uber. Oh, Airbnb, dude. This is a stock that I think a lot of us have hoped would be a great stock, but it's just turned out to be bad, dude. It's like the stock has been flat since it went public. The bankers made a lot of money on this one, like a lot of money on this one. Airbnb over the past 5 years, forget flat, it's down 2% year to date. And it's like Airbnb, like it's Airbnb, like everyone uses Airbnb. Like I've used Airbnb tons of times. I'm using an Airbnb next week in California. Like you would think such a well-known brand and name, amazing founder CEO would have a good return for shareholders, but it's been horrible. It's been so bad. So I don't know. I don't know what the street doesn't like about this one. Their free cash flow is amazing. You could say they're maybe a bit expensive in comparison to their free cash flow projections over the next 5 years, but I would say you could give a great counter argument that it's actually relatively cheap. I know there's some qualitative arguments that Airbnbs aren't as good as hotels and people like just going to hotels, which that's fair, but I don't know. This one's been a dud for the past 5 years. I made 30% on Airbnb, buying it at 100 and selling it at 130. Yeah, I mean, that's been a good move so far. Mitt, what do you think of PayPal? I like it. I don't like that this year is basically going to be, wow, it's down even more. Holy crap, dude. This thing collapsed from, remember it was 93 last week on PayPal? It's 77. Yeah, I guess the street doesn't like their buybacks. The street's like, no, we want growth, not buybacks. The street likes Apple's buybacks, but not PayPal's buybacks. So I would say I feel like PayPal is relatively safe with the buybacks, but
you're not going to be getting a ton of gains on this. And it might be dead money. Might be something good to sell calls against, though. So from a wheeling perspective, it might not be horrible. Their free cash flow is amazing because they charge $800 cleaning fees, $900 if you want blanket fees. Oh my gosh. They do charge an arm and a leg for fees. Can you explain your grab position for someone who doesn't understand options? So I can't get through the entirety of the explanation right here because, again, it's a little bit more of a complicated strategy. We will be talking about it on Options 301, but the general thesis of it is it's a call debit spread for 2027. I bought the 750 call and I sold the $10 call on top of it. And so if you don't know what buying or selling calls even means, then that's probably not going to make sense, but it creates a spread between the two options that's trading at about 35 cents right now. The value of that option is $2.50 because 10 minus 750 is 250. So 250 divided by 35 is a 700% return. And I put a lot into that. So we're going for the next big one. That can take the portfolio to the next level in 2 years if that one works. And I just think it's obvious. Like I think grabs $10 in 2027. I think it's not even that scary, to be honest. It's I don't know. I think it's relatively de-risked given the due diligence I've done. But then again, I could be wrong. And if I'm wrong, then I'm not going to lose all that money, but I'll lose a chunk of it. And it's just that's part of taking these asymmetric bets, right? Same thing could have happened on Robida. Thankfully, that one ended up working out. But it's the best asymmetric 7x I see in 2 years. I really can't find any others. Honestly, Hood would have been a great strategy for even more spreads in the beginning of the year, but I felt that, all right, I'm already so heavy in Hood. Why would I go even heavier? Honestly, it would have been safer to just go even heavier into Hood if the conviction was there because it was primed to have even more momentum. Did you consider a leap on grab? Yes, the strategy is a leap on grab. It's a leap for 2027. So essentially it's 2 years out for that leap. Spencer says, when I lived in California for a year, I just hopped between Airbnb vacation homes every 3 months and it was cheaper than an apartment. Yeah, I mean, there's a lot of digital nomads that do that, right? People that don't live in a set location. And Airbnb ends up being a lot cheaper. Gali from Hyperchange, he's one of those people that does that as well. He just books an Airbnb at different places. But from a stock perspective, the narrative there is just not as strong. Point Care Maps. Thank you for the $5 super chat. Why buy the 750 rather than the $5? You're just that confident, I guess. Yeah, pretty much. I mean, the $5 asymmetric is the 750, obviously, because the stock is very close to $5, whereas it's further away from 750. So I don't know. I just have a feeling about this one. A lot of it is due diligence, but a lot of it is also a gut feeling that this one is very similar to one in the past. And again, just like the chart, dude, it's 3 years consolidation with adjusted EBITDA margins going up, free cash flow going up. They're freaking GAAP profitable. They have $6 billion in cash. I'm like, they have a moat. Like, to me, they have a definitive moat. And if they have this acquisition, they're going to have an even bigger moat. So it's like everything's pointing in the right direction. Then it's a question of how heavy do you go? And if you have no better ideas, then do you play it safe and buy Google and Amazon and try to get maybe 10, 15%? Or at my age at 27, do you really say, let's swing for the fences? And if we lose, we lose. It is what it is. But if we win, we really win. And so that's kind of the thought process behind it. I mean, dude, it would be better if I didn't make the investment because all of that money that I put into grab options takes away from my margin. And so if I had that money instead, I could be selling so many puts on Hood and Nvidia and Tesla and be raking in the premiums every month. But none of those premiums would equal what a return on grab would look like in 2 years if it gets to $10. So it's kind of like a short-term loss in terms of even my purchasing power via margin. Because when you're loaded up on options, like your margin just gets hit, right? Because your brokerage is not able to collateralize anything meaningful. It's not a stock, it's not equity, it's not cash. It's just stuck in this like risky play. So I do think it'll be better than wheeling other stocks for premium.
Da, 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 da. You're not 27, bro. You look 35. Oh my gosh, dude. If I still had my beard, I'd look like 40. We were looking at videos of that last night. Which, speaking of that, I got to get a haircut. Dude, I forgot. I'm going to the West Coast in 2 days. I need to go get so much stuff done, which probably means I should end the stream. I got to get a bunch of shit planned and ready to go. Palantir, how do I end the stream when we're 10 cents away from 115? How do I do it? How do I end the stream? How do I do it? 10 cents away from 115. How do I end the stream? I can't. Amit, did you use margin to buy these spreads? No, I did not use margin. When I'm talking about margin, I'm talking about having margin to use as collateral for selling puts. I use like my actual cash to buy these spreads. But if I didn't and I had that cash, I would have higher margin, which means I could use that margin to then sell puts, which could generate more premiums, which, you know, would be more actual cash in my pockets. But I used it instead to buy the spreads. All right, we hit 115. We hit it again, I think for like the 3rd time today. Just hit 115. Let me just check resistance for 116. There you go. 115.12. 116 is 22,000 shares. 22,000 shares. Palantir this week is up 41%. This week. This freaking week. Year to date, it's up 51%. Since they've went public, they are up 1,049%. And if you bought at the very lows, you're up close to 1,500%. Past year, they're up 431%. Just wild, bro. Just like I'm still looking at a triple digit stock and I'm just like, dude, like this thing was $6 freaking dollars, bro. And that's because Palantir is
powerful as fuck.
All right. There you go. There you go. We're going to end the stream there. We're going to end the stream there. It's incredible. Absolutely incredible. Amit, did you sell those SoFi puts yesterday? No, I did not. I did not sell those SoFi puts. All right, guys. That's it for me. Let's do word of the day. And then we'll get out of here. I'll be back on the market close. We'll see how we end out the month of February. Or not the month, the week, the first week of February. And then that is it for today. What a week, right? What a freaking week. I mean, it's one of those weeks we're going to remember. One of those weeks we're going to remember. Word of the day is demarcation.
Demarcation.
The specification of boundaries. The river formed a natural demarcation between the two countries. The law outlines a demarcation of authority between federal and state governments. I don't think there's a demarcation or a specification of boundaries for Palantir stock because it continues to climb outside of any of the boundaries. Yeah, there's no demarcation on how far Palantir will go. Mr. Rogers is now Mr. Amit. I used to watch Mr. Rogers. I used to watch it. Chad, thank you for being here. Thank you all for being here. Hopefully you had a great day. Wow, the All-Star game is this weekend? I didn't even know that. Okay, so I guess we got that. And the Super Bowl. So I won't be watching it. I'll be on the plane on Sunday, but I got the Chiefs. I think we're going for a three-peat. And it would be epic to see that happen. Palantir Weekly will be tonight after the market close. There will be no Sunday future show. Saturday, we're going to do a Robinhood stream, and I think there might be another stream. So Saturday, we'll have a couple streams, but Sunday, we won't. And then we'll be back Monday morning. And Monday morning, we will have a market open in California. I'll be up at 5:45. All-Star game is next week? Okay, cool. So it's not this week. It's Super Bowl this week. So we'll do that. Monday, there will not be a market close. Tuesday, there will be a market open. There will not be a market close on Tuesday. Wait, no, there is. Tuesday's Robinhood earnings. No, Wednesday's Robinhood earnings. So Tuesday, there won't be a market close. Wednesday, there will be obviously a market close for Hood earnings. Thursday, there will not be a market close. And then Friday, there might not be a market close either. Or there might. So we might miss like 3 or 4 market closes next week, but market opens should be there every single week.
And that's it. That is it. All right, everybody. Thank you. I'll see you guys later today on the market close. For those that don't join on the market close, have a great weekend. Hopefully to see you next week. And yeah, congrats, everybody. It's been an incredible week. Bye, everyone. Have a good one.